You see how last week was like, we love American. We just hate the president. Oh yeah.
What did you say?
That's great new one too now.
Six. Oh, good. All right. It was like last year's rough house. That's what we're gonna do. You know what I mean? We're gonna get that guy.
Still, I think you can.
There you go. I think somebody was getting ready to say that. All right. Raise your hands if you can hear me. Cool. Got it. So I think you can unmute yourselves when you want to talk. This is a live Q&A, so that's kind of what we're going to be doing here. But I would like the people that do want to talk to raise their hands so I can see who it is that's talking. All right. I guess we can just start off with questions, and we'll go from there. Go on a rant or two. So, Giovanni, you have your hand raised. Do you want to ask a question here? Got a nice big room full of people. So at least
Can I ask a question?
Yeah,
Deepak?
go for it.
So I'm trying to do a covered call, right? And I'm just trying to understand the concept a little bit. So really, let's say I have AMD today at 84, right? And I bought it, let's say at 84 today. And I want to do a covered call at 90. Is that correct? So that essentially what I'm saying is I'm taking a premium today so that I'm hoping that AMD stays below 90, let's say in a month from now. I take a 4-week contract.
Okay.
Am I saying that correctly? I'm just trying to understand the concept of it. So all I'm saying is if it stays below 90, I make the premium. If not, I don't. Is that the concept?
Right. Yeah. If you're selling the 90 strike, and it never goes beyond that by expiration, you're basically keeping the profits.
Okay. What if it goes above? What if it hits 91?
Then your shares get called away.
Explain that. That's I'm so that I lose my shares then, right? But
Yeah. Once it's a penny in the money, then it becomes okay. Now you've got, this is the agreement part of the option contract where you agreed to terms that you're going to give up your shares when this goes in the money, right? That's why it's a covered call, because that's the
okay,
deal.
that's the agreement itself.
Right.
Okay.
But if it goes in the money, you still have profit, number one, depending upon theta decay. And you could potentially, if it's got weak contracts and there's, say, 10 days left on the one you're in, you could potentially roll it to the following week if you want to roll the strike up, right? And take in some credit for that.
So even before my contract expires, I can roll it another week?
Of course, you can.
Whoa, okay.
You can roll contracts at will, but it's per expiration, so you can only do it once per expiration.
Once per expiration.
Like you won't be able to do 319 twice. It's just once.
Ah, Got it. I have to pick 326 or whatever after. Got it. Yes, that makes
Yeah.
sense. So
Can you-
last thing.
Can you
Sorry,
explain the rollover part a little better? I'm sorry to interrupt, Deepak.
That's okay. That's okay.
Because what my understanding is, by rollover, you mean the shares get called away and then I buy back and then I create a new contract. Is that what rollover means?
No, and a covered call rollover just means that you're rolling that short call that you took a premium in for, and you're going to the next expiration, and hopefully you take in credit. Hopefully the stock price isn't far away from the strike. Then you can take in a credit, or you could also roll the price of the strike. So you can go up or down with the strike depending upon, you know,
Hmm.
how close the price is, right? That's relative. So it needs to at least be close enough to where there's some credit, because you don't want to roll and pay a debit. All right, that's number one, in my
Sure,
opinion.
yeah.
You don't roll if you pay debit. If you pay debit, you take assignment, all right, or you let the shares get called away.
Okay. Yes. Following. So if I can use my example from the beginning, I got my AMD at 84, got my strike at 90 in a month. Let's say it's at 86 in 2 weeks. You're saying I can roll and do like an April expiry option at 92 and get some credit for that.
Yeah.
Even though my original hasn't expired yet.
Yes, absolutely.
Huh.
The other option would be to wait it out, even if it's going. And if the market comes down, you can let it expire worthless. And given the fact that it's not in the money, is that possible?
Wait, I'm sorry, say that again.
So taking that example of AMD, let's say AMD is today at $84. I buy a weekly on a Monday covered call to say that AMD is $90 and collect a $100 premium. Let's say AMD goes to 92 by Wednesday, for example, and then comes back down by Friday to 87 or 88. That contract where I collected $100 premium on will expire worthless, correct?
Yeah, as long as it doesn't go above
$90, correct?
Yep, the
Yeah,
strike.
as long as it's not in the money,
Well,
it will definitely expire worthless. So if I let
If it expires at the money, it could be worth
Hmm.
something, you know, maybe 5%,
Hmm.
2.5 to 5%, maybe not even
Right.
that, right? I mean, if it's
Technically
like, let's
not
say it's
worth
$100, you know, you
Yeah.
might see a $8 difference on
Correct.
what it's
So
worth.
at that point, when it's at the money, does it does my contract gets executed and I lose my share, or how does that work?
When it expires,
Yes, when it expires.
so you have 100 shares, you have one contract, it expires in the money above
Or at
your
the money.
and it's, well, for at the money, it's still 90 to 95% profit for the seller, the option seller,
Mhm.
right? So,
Correct.
but then when you start going in the money, then it becomes a different ball game, because now it's taking your shares. If you're a penny inside of that strike, it will
Right.
take the shares, right? So there's ways to get out of that with nearly full profit. There's ways to roll. You know, you could, if you don't want the shares gone, but you know, worst case scenario, they take the shares and you finally realize your total profits.
Hmm. So
Or else I
okay,
can pay
makes
the
sense.
debit, like let's say it's $89 or $89.50 or whatever. I can do that $5 or $10 debit and get out of that contract and create a new contract for another week. Is that an option? Does that make sense? I'm sorry if
Not
I'm,
really. Ask it
So,
again.
so let's say, for example, taking the same example of AMD, it's at 85. I buy a weekly for $100. For 90 strike price, collect a $100 premium on Monday. If by Friday, it's around 3:30 p.m. Whatever, it's around 89.90 or 89 whatever, right? It's very close to the money. I can still buy the shares. Sorry, I can still pay the debit and close the contract.
Yes.
Okay, and it could either be, and the likelihood of that happening, it's like a likelihood of it being higher than the premium I paid is very less because it was a weekly. If anything, that will be worth
Well,
5 cents or something.
yeah, the theta will have decayed all
There,
the way
correct.
finally,
Mhm.
and now you've got a contract that's basically decayed almost completely, if not all the way, right? And you know, at 10 cents difference in the price, you're looking at your shares being called away or expiring with full profit, right? It's a risk in the sense that do you want your shares called away, right? So in that scenario, if you don't want your shares called, then yes, you're going to want to pay a debit. You want, I mean, you basically to get in and out of these positions, you sell to open, buy to close, right?
Yeah.
So no matter what,
Right.
you don't want to risk $10, $5, $10, $15, $20 for the shorting side of its profits, right? And your
Right.
long side, which are the shares, now you retain those, and now at the money that you're at, you can find another good resistance level that'll
Mhm.
probably be potentially worth something good, or wait till it hits that level and then sell another covered call on it.
Got it.
Like if you're into Apple and you think Apple's going to continue going up and up and up, and it hits a high, you get 100 shares of Apple, it hits a high, you sell a call against it right there, and then the price starts falling and slowly, falling, and it just does that for 2 weeks. And by that point, now your position's worth um, theta burn, right? And theta burn's nice, especially if you're doing 1 or 2 week contracts, right? And that's what I would like to do once I start putting money towards covered calls, is um, basically lost my train of thought. Awesome.
That was a good explanation, man. No, I appreciate that. That's clear.
And I have one more question, Hostel. I mean, if it gets annoying, let me know. I'm happy to IM or something. Let's say if I buy a weekly, right? For example, taking the same AMD or Apple example, my contract is in the money by on Friday. I'm hoping it's going to come down. It's going to come down and expire worthless. But let's say it doesn't, and it's close to the money. At Friday 3 p.m., I realize it might close in the money. So at that point, can I, at 3 p.m. on Friday, can I still roll over the contract at a newer expiration date and a new strike price?
How deep in the money can it expire? Are we talking 5 cents? Are we talking $5? I mean, what's
Hypothetically, let's say $5. Let's say Apple, I have $125. I bought it at strike price of 135, and the price is, let's say, 140. Just hypothetical on Friday 3 p.m.
I feel like he's
So
got to pay for it, man. Sorry, I feel like you could pay to get out of any position, right? He's got to pay that debit.
right. So I can obviously debit it and take a loss.
well,
Yeah.
you don't want to do debits, right? I mean, the whole game here is
Right.
not to go
Not to, but
to
you
debit,
can.
right? And
So what are my options at that point?
you could roll. It depends on the contract, right? Or I'm sorry, the option chain. The open interest. Where does it? If there's open interest at every strike, then roll to the next week, right? Hope that it's got weeklies and you're in the monthly and the monthly's expiring, and you've got 3 to 4 different contracts sitting right in front of you where you can do weeklies. So if you can do weeklies, take in premium, that's best case scenario, right? And if you can
Mm-hmm.
roll at the same time with credit, now you're looking at fantastic um, position management, but it's not going to be like that. Like that's rare to be able to get that. But anyhow, you got to make sure that you're protected, I guess.
Right, and that's what I'm trying to understand. Let's say if it doesn't go sideways, it's going up. I'm hoping that it's a 2-day run and then it comes down and it keeps running, let's say for the week. and it's a weekly, so obviously a little higher risk. My question is, what are my options to not let my shares go at 3 p.m. on Friday if it's, let's say, $5 in the money?
Well, you can roll, but it's probably going to require some time. So maybe 30 to 45 days out before you'll see premium. Question is, the price of that stock at 50 and you got in at 45, whatever the number is,
Yeah.
or your strike was 45. Is that a high? The 50, right? Is that a high? That's the question. Because if it is, then it's better to just roll the same strike, right? But if it's breaking all-time highs, then you're going to need to be able to have the ability to roll a little bit, right? So you might have to go out 2 weeks and roll down one strike, which is probably like $1 in the 5, right? So what you're trying to do is buy time, push the contract out and buy time when you roll it, so that, or sell time rather, not buy time. You're
Yeah.
selling time. So once you get to that point where you can be able to sell time, you know, that's where the theta decay comes into play. That's where the expiration time frames come into play. That's why I always say, if you're in positions where you have to roll, or it's going to be something that, you know, it's a 50-50 chance, and I'd say covered calls generally is, because you want to let the stock price ride up some, you know, $3, $5, $10 before you finally let it go and ride it with profit or premium the whole way, right? So it's just got to be. What did you have another question?
No, I was just kind of like, I get what you're saying. I understand, like, I can sell time and then roll over the contract, but I think conceptually what I'm still a little confused about is the fact that when I roll over the contract, do I collect more premium or do I have to pay the price if it's, let's say, $5 in the money?
Oh
What
no,
happens?
I said that earlier. You never pay a debit to roll. If you're paying debit,
Okay.
then you're doing the opposite. Now you're eating into the premium that you got in the first place, right? So you don't want to do that. You know, so when you sell that short-term call, you got
Mm-hmm.
premium for it. Let's say 250 out of that $5 difference. So you're at 47.50 is where your break-even point is,
Right.
right? Let's say, you know, shit, my daughter was messing with me and I forgot what I was saying again. 47.50. What were we talking about though, as far as the 40?
The rollover. You're talking about, you explaining why you wouldn't want to pay debit while rolling over.
Right. Okay. So, you know, you're basically eating into your profits that you got from the initial 250 that you got paid, which is the break even of 47.50, right? So now you want to make sure that you don't eat into that, because that's, now you're going backwards, right? And you're defeating the purpose of what you were trying to accomplish in the first place, if that makes sense. So make
Yeah, I
sure
think
that,
so.
and timing is important, right? You want to get it when it's pumping. You want to roll it when it
Correct.
pumps,
Yeah.
right? And, you know, if you're in a position like, let's say what you're talking about, 45.50, it's Friday at 3 p.m. I would have 10 trading days ago have made a decision or started making decisions whether or not I'm going to need to roll this, and I'm going to need to roll it in the next 4 to 6 days, right? So
Mm-hmm.
by the last day at 3 p.m., you're almost screwed in some ways. If it's completely against you, you're just going to have to let it go, right?
Okay.
Hey, Hostile.
Yes.
So since we're on a rolling topic, by the way, this is Siddiqui. So let's just say I'm getting cash secure put on PLTR for 9th April, and I'm getting the put for $30, and I'm collecting 800 premium on it. But the stock price is right now going on 23, 24. It's not 30. So I'm going higher than usually you go lower, right? But I'm going higher because I think in 43 days, the price will go up for sure. But there is any chance there that in this 43 days, they will assign me for those shares because it's like, it's higher than the price.
So on a CSP, you generally won't be assigned stuff unless it's like five days before expiration, maybe 10 days.
Okay.
Depends on the squeeze.
So like if I'm having 20 days left and the price is still like 25, 26, or because I'm pretty sure the PLTR will go up, but let's just say if it doesn't go up and I have 20 days or 15 days left,
Well,
and
here's the thing. You said you got 800 for it, right? Premium?
yes,
So that
yes,
puts your break even at 23.
to 22, yeah.
So
But my real
from-
question here is now the price is dropping right now. So right now it's on 23 something. When I got it, it was 24 something. And what if the price just go lower? Then I will be in a minus, right? Because the put will go just higher and higher.
Of course.
So
yeah.
is it gonna let me roll, or do I have
Well,
to pay debit on it?
The only time you start worrying about rolling or paying debit in a roll is when you've got 10 days or less of expiration.
Yeah, that's what I'm saying. Yeah,
Okay.
like 10 days, 15 days before, or they're just gonna assign me for it, or can I still roll it before 10, 15 days?
Yeah, I mean, you can definitely. I'd say I would still have the same plan as what I said before. 10 days, I start deciding what I'm going to do, if I need to roll, when to roll. Hope to catch it on a pump. Catch it in a pump, then I can roll it for a better deal.
Okay.
And get credit for it potentially. I mean, I don't know if it's 45 and 5 and 27.50s, or I'm sorry, 47.50s to break even. Then we're looking at $250 difference. Might not see too much of that. But here's the thing: the moment you roll into that, you get that credit. So let's say, for example, you got $250 in credit, and it gives you 85 and more credit to roll to the following week. So let's say you roll with 6 days left of expiration. Now you've pushed it to about 16 days or 14 days, or I'm not sure what the math is on that. 11 or 12. So then you'd be in the position where that extra credit, if the price goes up further, you're going to see it. It's going to be quick, right? It's your profits before, when you were looking at 250. Now it's 330 plus, right? So that's the range now, and the percentage of the movement increases faster, right? So it's a real benefit if you get credit for rolling a position, specifically selling. You can't get credit for buying. But if you're rolling for credit and you're able to stack that credit on top of each other, let's say right now the PLTR, somebody mentioned it, if you have a 30 strike, if you're able to roll even just the 30 strike and take in a credit for it, and let's say you've rolled 3 times now, the first time you got $400 and you've rolled for 100 or 75 each time, now you're down to, let's say, $500, right? And PLTR starts moving back up and now is at 26, right?
Yeah.
So, every scenario is different, right? And every position that you're in is going to be different. So it's really hard to say. I mean, that's about as specific as I can get, I guess.
Okay, so here's my second question. So you say you can roll it and get the credit, right? So what I did I wrote I got it today for 800 on 9th April, right? Let's just say tomorrow the PLTR will go more down 22 or 21. And if I decided to roll it tomorrow on 16 or 21st May, and like the premium will be 900 or 1,000, so am I gonna get that $100 or $200 above, or I have to pay the $100 or $200 difference?
The difference is what it's worth right now, and what you sold it for is $200 less, which means anything on top of what you sold it is a debit from you.
So it's debit, it's not
it
credit.
would be a
So
debit.
because
However, expiration time, this is where expiration time comes into play. Right? If you go out and another expiration past the one you're looking at, now it might have went from say a $60 debit to a $40 credit. Right? Now you can roll that contract for $40 more, right? So
I'm gonna get that $40 credit, but not debit, right?
it's a credit. You're
Okay.
basically closing the current contract for say $100 and opening a new contract for 125 because you sold more time on it, so you got an extra $25. That's
Yeah,
how
but
a roll
what's the
works.
original price for that premium?
100
Like you
bucks. So
sold it.
let's say you opened it, you got a $100 premium. Now you can roll
Okay.
it, for to the next expiration for 25 bucks. Now it's worth 125.
Okay. So basically, I sold it for 100 first, then I'm rolling it back, and then I'm first buying it for 100 again, and then I'm reselling it again for 125.
Yeah, that's the process of a roll. However,
Okay.
when you do the roll, you're not realizing profits or losses, right?
Okay.
Whereas if you were to actually manually do it yourself instead of
Then you
like,
realize, yes.
yes,
So
correct.
that's my whole point. Like I would just want to know the process, what is rolling it. So basically rolling means whatever I'm selling it, I'm buying it that one first, and then I'm reselling it on a different expiration date.
Further out expiration.
Yeah, further out. Okay.
You're trading for time.
Okay. Now I get it. Yeah. Thank you, Star.
You're welcome. Okay. JG664, you got a question? You got your hand up here?
Yeah, I just got a question. It's more of I'm more of like, I don't know, I'm probably been messing around in an option game for about a little over a month now, going on to 2 months, been kind of watching on the bench. And I know I see a lot of I'm in a Discord and you see a lot of people, talking about, man, I'm down on all my bucks and everything, and I'm losing everything. It's like, like today I'm probably down like $1,000. I know a lot more people are down a couple $100,000. And if you're an experienced guy, I was just wondering your insight on what do you tell the guy that's just getting beat up on everything? You're doing your due diligence, you're reading the charts, you're making these plays, and then you're just getting your ass kicked. So,
Well,
I guess how do you tell a guy to just keep rolling?
I had a good story. I mean, I could tell a story, or I could just say something straight.
I know. The straight answer is it's your money.
You don't gonna
You
don't gonna understand.
Well, if you're in that position, you're doing something wrong, right? Even though you're probably doing a
Yeah.
lot of things right, you're doing something wrong, and it may be the strategy that you're trying to apply, right? So that strategy may work for somebody else, but it's probably not working for you. And that makes a difference based off of the hours you work, the time you can spend into watching charts while they're moving, and reading and analyzing them at nighttime when they're not, right? So you gotta find. I would say it's probably the strategy. It's probably the choice that you're making to get into something, and you're just not able to get in at the right time, or you get in at the right time and it goes too quickly and you couldn't get out. Is that kind of the scenario?
Yeah, that's pretty much it. Like you see it, like you set your, like it just decays so fast. And my one problem is I didn't switch to a cash account. So, and I don't have the 25K in my account to just do day trades. So you get smacked up, and then, your one thing is set your stop loss, but then does it stop you from making that trade? But I guess those are all, factors you can fix, right? But I guess I'm just saying, people get, I think it's what you were saying was it was a strategy thing. And I guess I don't know what strategy to go to, or because I know it takes time to learn. You're not, a couple guys that make some Hail Mary calls on GME making, fat money today, so
Right.
anomaly calls. But I guess the guy that's trying to learn and invest and doing everything, what do you tell that guy instead of, okay, I lost $2,000 learning how to trade and it ain't for me. You know what I mean? Where I'm not that guy, but there might be someone on this call that might be that guy,
And
Well,
Hostel, if you don't mind, I was that guy. I can help answer that once you're done.
sure. Yeah. Well, I would just say that, you got to figure out what works best for your lifestyle, right? There's all types of trading strategies, and whatever it is that you're attacking right now is probably the wrong one for your lifestyle. Trade shares, right? If you want to get into trading and you just don't know what it is that you want to do, start with shares. That's my opinion. Safest way to do it. Learn support and resistance. If you learn that, um, learn some trend analysis and how to determine if it's an uptrend or downtrend, that kind of thing. And then you can read charts basically for the most part. And trading with shares, it's easy situation to be in because there's no time. So that's where I would start. However, if how much cash do you got? That's the other question. If you've got 100K, then I would suggest something different. But if you've got 1,000, then I would say definitely do shares.
Yeah. So how mine is, I have an Ally account that has like longs and dividends, with about 15K. And then I put another one, open up a Robinhood, and then I got them waiting on Webull. So I got another 5K, to learn how to trade options and day trade. But it's like, I don't know, I'm learning, but I'm down. I think I'm down total like 2,500. So half of my 5, play money is like, man, I'm not doing something right. So that's kind of where, that's kind of where I'm going, is how do you keep someone interested when all you're doing is getting busted up?
What's your goal? What is it you're trying to achieve?
I'm trying to learn, and I've been watching the market for a while, and then, B, just
long term
wealth, but it ain't going to come in the short term. I know that for a fact.
No, what it is that you're, are you trying to replace a job? Is it retirement? Is it a little bit of extra side cash? What is the goal of your trading?
I'd say long, end game. I like what I do, so you don't want to replace it, but if it comes to that point,
Okay.
I guess the true answer is I don't know where I'm going.
Then there's a
I'm
different
learning.
path you should be going, in my opinion. Right? You should have a Roth account. You should put all your money into that. Right? Well, honestly, you can only do 6,000 a year, and it grows tax free. However, it only grows if you trade it. It's not like, oh, throw it in here and then it just grows. No, it doesn't work that way. You have to trade it. You could buy mutual funds that do grow, but they also debit you. So, but either way, since your mindset is long term, I want this to be my retirement. I I want to make the most what I can make. The strategy should be put in a Roth $6,000 contribution per year. It's taxed already, so they don't tax you on your profits in the future, right? So now you're looking at saying, once you do figure out how to flip that money, now let's say you've contributed for 3 years and that's $18,000, but you've turned that 18,000 into say 50, right? So now we're looking at a situation where that 30 plus $1,000 increase is tax free. And it will be for the, I mean, as long as, well, you have to be 59 and a half before you can touch it, right? And,
Right.
but you know, if we're talking retirement, that's the goal here. I guarantee.
Sorry, how much is the penalty? How much is the penalty for that? You want to you have a case or something to remove that money?
Well, contributions can be removed. No penalty, no tax, because they're already tax dollars. So that's an
So
option.
it's a tax on it. Of the 6,000, you say it's free, but it's tax on it or it's free of tax?
There's no
Because-
tax on
Okay.
contributions. You can pull it out anytime, no tax, no penalty. There's no tax on profits after 59 and a half years of age.
So what I was thinking is, because I make so much money last year, even it was bad, but then you get in employment because practically I'm not working, but I make $18,000 last year. So I can't put that 18,000, the 12,000 for last year and this year without paying for taxes for that purpose. I can do that.
Okay, let me make sure I understand this. You're not working, but you made $18,000 last year
In the stock market. In the stock
in
market.
the stock market. Okay, so
Yeah.
the rule of retirement accounts is that you have to be making, like, they have to be able to show that you turned a profit, right? And that amount of money, that's the threshold as to which you can contribute to 401ks, Roth IRAs, traditional IRAs,
Yeah.
that kind of thing, right? So 18,000 would be the cap that you could put towards your account, right?
Okay. No, I run when I start trading, I start with 500, and over the years increase, but I pull it up the money to buy properties and buy stuff, real estate. And if I didn't remove the money, I will have around right now $250,000 plus. But I need the money, so that's what I did.
In my,
And now
my
I'm
opinion, I
learning
think
from Oceans. Yeah.
real estate is something that you should bother with later in life.
No, I've been doing it over years because I was working in that field.
Think about
That's
this
why.
for a second. $250,000. How much return is that giving you a month?
If I didn't pull out the money, I think it will give me at least a month, $10,000 to $15,000, easy or more. If
A
I don't
month?
remove, yeah,
On real estate?
no, oh, and real estate, no, I don't talk about real estate. Is about land. I mostly
Oh.
bought land, $3,000, $4,000 land. I had lands everywhere. They get overvalued. I sold them for double, 3 times the money value. And comes in and doing stocks is I've been doing this for years since a kid, since I was in high school. And now I
Okay.
want to trade auctions and then learning. That's what I'm listening to.
Oh.
And
So-
the other guy
so-
that I hear, the other guy problem is like you burn. It's like you put gasoline to a car in a car, and you go into the desert, and then you know you're gonna run out of gas. So what are you gonna do? You preserve the gas or you keep burning money? So you're trying to learn or do what for the raw IRS, or go with a simple stocks. Sometimes the newspaper tell you everything in the overhand what's going to happen on the market. Everything is
Yes.
played out. Everything is played out. The only thing you have to, if you are playing or you really want to burn the cash, burn.
Yeah,
In my case, I didn't have the choice because I had this 500 or I had this $1,000. If I burning to make that money again, we don't have being possible. So
Well,
that's why I
here's the
was in on
point
the.
that I wanted to make. If you had $250,000 and normal real estate, we're talking $500 a month on one property. Let's say you bought one property, it's 250K. You're making a $500 return on that rental property, right? $250,000 in the stock market, especially the way I trade, I can make 10 to 20,000.
Yeah, that's
Easy.
what I was talking about. I don't have. So, I mean, I use the money from the stock market. I pull it up some of the money and I buy land. That's
Yeah,
what
but
I do
why? Well, that's the thing is why buy the land if you can make more in the stock market?
because I still keep making money.
But
I
here's my
still keep
point is,
making. It's something that I want to do.
if you
That's
got
something
$10 million,
because I'm working in the field of architecture.
if you've got
So
$10 million in a trade account and you only put 50% into the market, right? That's basically what we tell everybody here. Don't do more than 50%, right? So, what was the number I said? How much did I just say? 15 million?
10.
10 million.
You say
So,
10 million.
yeah,
10
yeah.
million.
So if you've got 10 million and you got 5 million in the market, right? You know, we're looking at, let's say, what percent return would your real estate give you?
Really low.
Really
The
low.
market give you
So
the
like
market give you a lot.
2%. Yeah, right. Exactly. So why spend the money on real estate when it's giving you 2% return when if I've got $5 million in the market and I just make a minimum little measly 30%, we're looking at $1.5 million. Real estate's not going to do that for you.
Yeah, I know.
It's just no
I know
chance,
that
no
for
way
fact.
at all. So that's why I'm kind of disappointed that you took your money out and put it into.
No, I didn't. No, I didn't took. The thing is, I was overspending over here. If I keep making the money that I was making on the stock market without paying for things, traveling, luxury stuff like that, I will have that capital. Now I have over 100 and something, and then that's what when they go to TD Ameritrade to do they put in a pattern day because they want to try you. And then you have over that kind of money. That's what I get mad the other day.
Yeah.
Pre-rack, can you? Never mind, I'll just mute you. Okay, so I think JG, was your question answered, or did I?
I don't think it was kind of confusing. It was really just asking because I'm trying to learn how to option trade, right? I got long terms, I got dividend stocks, I got the Roth, I got the 401ks, I got, I'm like,
Okay.
I took $5K to learn how to option trade, made some options.
All right.
Got my ass kicked, and now I'm like, okay, I lost 2,500 in a month, and I'm like, what do you tell the guy? What do you tell the guy to keep going, keep learning? That's just part of the process. Everyone's not going to strike it big. No,
I would say let's go for consistent returns. Let's go for something that can over time turn into millions of dollars, right? And I would say let's consolidate all of your accounts into one if possible, but it's probably not possible because you've got more than $6,000 potentially, and that's the max that goes into a Roth. And I would say that a Roth is where you should be putting it first and foremost. However, you can still contribute to your Roth for 2020 and 2021. So that's $12,000 that you could put in this year. All right, so that's where I would start. I would say consolidate everything that you can and put it into that account, and let that be the one that you do the consistent and safe trades. right?
Mhm.
Stop doing what you're doing, right? It's not working. Stop doing it. There's
Right.
other things to do. The stuff that are long-term dividends and that kind of stuff, I would say get out of that. I would say if you got a 401k at work, you know, stop contributing to it and take out whatever you can from it and put it into a traditional IRA and start trading
Mhm.
that. Right. So, example, I've got two Roth accounts, one for me and my wife. I've got a brokerage account. I've got a traditional IRA. Um, I was able to take some of my 401k from another job, roll it to a traditional IRA, and then this job that I'm at, I took some. I still work there, so you can't take it all, but I got a little bit and I put it in there. So now that I've got three accounts that are trading basically at $30,000 to $35,000, and one of them is a traditional IRA that I can roll over funds into my Roth. Right, I just have to pay taxes on it. So the beauty of that is, and this is why I'm suggesting all the, this is kind of a big strategy. So really pay attention to what I'm saying here, because it's important to understand that if you have multiple accounts and you're able to grow all of them at the same time at the same pace, they're all going to profit for you the same amount, right? And basically, what I have created for myself is three accounts that grow at the same time. I got a brokerage that kind of does its own thing, right? So um, if I'm making 4 or 5% a month, we're talking $3,500, I think, um,
Yeah,
in 2 months.
about it. Yeah,
Yeah. So
rough there.
that's the slow and consistent part that I'm explaining here, is that it's taken me a long time just to get to 30 some thousand dollars, right? And I've been fortunate enough to be able to put some money in and make money over the years, right? So um, it's not something that's going to be easy, but I will say that if you target safe, consistent returns, don't go after those huge home runs, the GMEs and that kind of stuff. Stay away from penny stocks. Don't buy options anymore. If you're going to buy options, get a leap. But even then, I think that's a strategy that takes a little bit of understanding the market. Um, Safest strategy, in my opinion, it requires money, right? So there's two types of strategies that I would suggest to you, right? That's going to be shares, obviously, first. It depends, if you're starting with 100K, that's again a different story. But if we're starting with shares, then you're gonna have to start somewhere, and options isn't it. Um, you can do shares for to get to 5 grand, 5 to 10 grand. I think is probably a safe number. Then you can start doing what I call cash secured puts, right? Selling a put for premium, hope the price goes up. If it does not, if it goes in the money, so it goes, let's say I sell a 20 strike and it doesn't go up, it goes down to 18, expires, I get assigned shares. If my shares were worth $200, I'm at break even if the stock price is at $18. So I could get out of that with no loss, basically. Um, now, um, if it did not assign me the shares and it finished at say 22 or 23, you just took in that $200 premium pretty easily, right? You can get out of that position much sooner. So it basically has downside protection to where if the option itself goes against you, now you own shares, right? Um, so, and that goes deeper into another type of strategy that we call the wheel strategy, where it talks about selling covered calls because you got assigned shares from a cash you could put on a CSP, or which is a CSP, right? So that also does not require you to have be around the computer all the time. You don't have to what do you call it, like babysit your trades. You can walk away. I monitor mine on my phone. Like I'll go to the gym, I'll work out a little bit, look down at my phone, check my trades. If I got profits, I can get out right there, right? Great. Here's the thing with cash secured puts that I've learned over time is you get into it, and if it jumps up instantly, next day, next 2 days, it jumps up, and I've got 25% return, I'm taking it off the table, right? If I've been in it a week, 50 to 65% return, right? And from then on, it's 50 to 65%. And that may happen with just theta decay. So
So the theta decay is really what kills your options, right? That's where I'm.
yeah,
That's
that's
kind
what
of
you're
what I'm learning on
experiencing.
my. That's what I'm learning on some of these options that I got. You know, like today it was just an eye opener. You know, I had a Facebook call for 265, and that sucker just dropped, right? So now I'm like, now there's like $90 left in it, and after hours it was down another 3. So it's like, what do you do at that point?
Well, that
I know
one's
we're going a
just,
different
I
route,
mean,
but
hopefully you got time on that.
that expires tomorrow.
Yeah.
So I'm
well,
probably it's probably going to expire worthless, right? So
yep, that's the problem is when you get short-term stuff, theta is killing you. That's why I
yeah,
said when I was talking about buying options, yeah, buy some leaps, buy something 6 months to a year from now. You can totally do that, but
mhm.
I wouldn't be doing stuff short term because you're going to get crushed. You're going to get slaughtered. It's a 50-50 chance. Might as well go play roulette black and red.
Yeah, that's what I think. That's one of the problems is I'm getting, and this isn't against anybody. Like I said, I'm in a Discord, and those guys probably have been trading stocks for a long time. Just like we're Chris Johnson or in Only Trades, Shark and Tillo and all those guys. It's like those guys are trading big money, day trading. The little guys like, yeah, dude, we can go out and buy, YOLO 20 grand on AMC. We'll have a Lambo next week. That's what everybody sees, and that's how it's.
Well, that's what separates the winners from the losers,
Mhm.
right? Plain and simple. When you
Hey,
get
hostile.
crushed, you get crushed. You become a loser, and then you realize what it's like to be a loser. I mean, I just have to say it. I've been a
No,
loser.
and I get it. That's how I feel today. It's like then I had a come to Jesus moment, and then I'm like, I saw the Q&A, and I'm like, maybe there's a guy on here that's thinking the same thing, that got their ass kicked today or yesterday or whenever, and they're like, man, what, obviously you got to go back to the drawing board, but.
Well, yeah, I mean, I've over the course of 11 years or so, I've had to go back to the drawing board so many times. I'm still going back to the drawing board, looking at
Mhm.
things that I was using before and questioning it, saying, well, okay, yeah, I guess it checks out. But I'm always questioning what I've got, right?
Mhm.
Because I'm trying to get rid of the stuff that's on my charts. So, you know, you just got to find, again, like I said, stop trading the stuff that you are trading
Mhm.
and consider some of the alternatives, right? Option selling.
Hey, hostile. How much would you recommend, like the minimum to start selling premiums?
Well, if you're talking about CSPs, like what I'm referencing, I would say 5 to 10 grand minimum. I mean, I like 20 or 30 because then you can, massage one play pretty well, right? At 5 to 10, you can get into one play and it goes down, and you just have to ride it out. Whereas if I've got 30 grand and I get into one play and I feel really confident on what I'm doing, number one, that's key here. Like what I've personally been doing is I'll get into something, it drops, it hits a support level, I'll get in some more, right? Because I don't recommend people do that, but this is just the type of strategy that I do with one particular stock, and it works most of the time, right? So I don't have to wait for the expiration of the contracts to get out. I can get out, like, let's say I get into something at a 50 strike, and then tomorrow it jumps up $3 to 53. Well, and I got paid $500 on the premium. So let's say that's the scenario here. Come the next day and it's up $3. I'm probably looking at $150 to $175 in profits in one day, right? That happens half of the time. But the thing is, you've got to have significant amounts of capital, right? So if something goes against me, and let's say it hits 45, and I say that's a really good support level, I'm gonna grab 2, right? And I might be able to get them at 45 for 500 also, right? So you kind of bail yourself out in a way, as long as there's confidence in the direction of the market and that kind of thing. To where if you're down on one, you grab the next 2 at support below, and there's just ways to make it, to maximize your returns quickly. Because what I expect is it drop, I get in more, it goes up $2 or $3, I'm able to get out of everything. The first 2 I can get out with $150 a piece, and then the one that I initially got in with, maybe I'll get out for 10 or 15 bucks, right? Because I don't want to be in it. If it's already dropped that low, I should probably get out, right? So I'm looking for an exit strategy on that 50, and then I just sold the 245s as well. So that's a strategy that I recommend for advanced traders. But the type of strategy that I'm using in this trading is cash secured puts, plain and simple. If you want to get into 5 positions, right? Let's say, for example, I want to get into Fastly, I want to get into Neo, PLTR, and let's see, Lee, LI, Laser, right? So most of those are $30, $28. Fastly's $7, $75, $70. Neo is $50. So we're looking at, say, $15,000, $20,000, right? 17,000, 18. Let's just say 20,000, right? In 5 plays, that's 20 grand, right? And you get, let's say your average is 6% premium, low, mind you. I normally like to go for 8 to 12, if possible, and depending upon where it is and everything. But let's say 6%. Out of 20,000, 6% is what we're looking at. And that's a scenario here where if something goes against you, your option doesn't die to the point where you just lose money, right? You just own shares now. And that's the thing that I said initially is buy shares if you don't have a lot. If you're new to trading, that's what you should be doing. Buying shares and selling shares. If you're losing money, number one, if you can't make money trading shares, you cannot make money trading options. So go make money trading shares first. I challenge everyone here to do that. Go make money trading options, or I'm sorry, shares, right? And if you can do that, then I'd say you are rightful in the place of trying to learn options. This is advanced strategies. This is advanced. I mean, buying an option, like what most of you folks do. You buy a contract and hope it goes up, you sell it for profit, right? Doing that, in my opinion, is the hardest to do. So I have a way where I say, again, shares is the easiest. Selling cash secured puts and covered calls is second, right? Third is going to be buying options, like Tilio. What he does is the most advanced stuff. He scalps. He's in and out quick. He's making money. Well, honestly, Tilio does all types of trading. He doesn't just do one particular type of trading. But you got to have enough capital to be able to do that, right? Some of us don't have massive amounts of money. I mean, I have a decent amount, but I don't think it's massive by any stretch. So it's hard to do more than one strategy until you get to say $1 million, $2 million. The beauty here is that when we're selling these options, let's compare both buying and selling, right? Doing what I do versus doing what I guess JG was doing, where he buy a contract and then it just starts decaying and dying. Now it's worthless, right? So let's compare the two. All right, so we buy something a month out, both buy and sell a position a month out. One costs me $600, one pays me $300. Right, so stock pumps, right? That benefits both of us, right? Both positions benefit when the stock pumps. We should both be getting out, right? That's what we should be doing. We should be doing that 2 or 3 times a week, right? This is quick. This is what I call quick account building with leverage, right? If you're able to flip something every 2 to 3 days, preferably every other day. That way you're doing 3 days a week, hopefully. Easier said than done, though. So quick account building, right? I want to get to 500K, and then I should start seeing $5,000 to $10,000 in profits a month, right? And this is what I was saying before about retirement. You get into an account, you've got $500,000 now that you've built that account up in 5 years. You've done it in 5 years or so. Now you could take out that in 5 years. It's what, $6,000, $30,000 that you contributed to that. You could take that money out and do whatever you want, right? But that extra $470,000 is going to be sitting in there. That's all profit, all tax free. And now, let's say you only make 2.5% a month. Shit.
Hey, Hostile.
Yeah.
After this, can you talk about on taxes a little bit?
I mean, I'm not a tax professional, but I can just, I guess, talk about what I know.
Yeah, that would be good. Thanks, man.
Sure. So, I mean, with $470,000, my strategy, if I make 2.5% a month, that's $11,750 in 1 month. Now, with these types of strategies, cash secure puts, covered calls, especially covered calls, they get drawn out. Right? They go and go and go for 3 to 6 months, especially if you're riding a wave up and you're able to time the market and get out of covered call positions before it goes against you and make a little bit of cash with the stock price going up. That's the idea about covered calls, what you want to do. Cash secured puts, it'll only prolong if it goes against you. I guess, honestly, same thing I just said with covered calls, but cash secure puts, you own shares and you have choices to roll just like you do with covered calls. But if I've got $470,000 and I'm making $11,750 a month with only 2.5% return, imagine what you'll have with $4 million. Right? So if you've got 20 or 30 years to build a Roth retirement account, let's say you're 30, 29, 30, 25 to 35. I mean, honestly, it's not too late for anybody to start it. Right? But if you're 25 to 35, you've got 30 years. Easy. Right? So you can take 30 years to build that account. And I guarantee you, if you do the strategies that I suggest as a foundational type of trading, right? Shares, and then get to, honestly, I would say again, 20, 30,000 is the more comfortable level for doing CSPs. So I would probably try to do that. But I will tell you this, if you cannot make money trading shares, you shouldn't be doing options, right? That's the number one thing. If you can trade successfully, you should learn first how to sell options, because buying options, in my opinion, requires more understanding of things that are even more so required in selling. right? Like Theta, you buy options. Most people, they get into options, they go out and buy contracts. They got no clue what Theta is. They got no clue what implied volatility is. If you don't know those two things, then you're not going to know whether or not you're paying too much for a position, right? That's one. Um, let me get some drink. Mouth's dry.
I just want to say I appreciate you going in super depth like this. Sorry, we're stringing out this question, but
Oh, no worries. I mean, I believe that it benefits everybody to understand this information because, if you have this type of information at your fingertips, now you can start making the right decisions and choices based off your future and retirement, right? And the younger you are, the better positioned you are because time, as everybody's heard, time is money. The older you are, the less time you have. The less time you have to make money, right? So again, if you've got 30 years, the sky is the limit to how much money you could be making. I mean, last year I made 105% return on my account, right? So imagine if I could do 5%, or I'm sorry, 105% for 5 years. I would be a millionaire, right? What's to say I can't do that again this year, right? What's to say that I can't make 105% return? Last year I did in 8 months, mind you. It wasn't even a full entire year. So
So hostile, I have a
that was
question
just
here.
doing CSPs or mixture of everything.
CSPs and shares.
So I have a question about strategies on your CSPs and covered calls, right? First question, let me talk about the covered CSPs. Would you, I know Faiz does a lot of CSPs on TNA and he charts supports and resistance and he kills it all the time. So what's a good strategy? Stick to one, like a TNA or a TQQ or something like that to do a CSP, know your support and resistance, or do you recommend doing CSP on any, ticker that you? Mhm.
It's better to stick with ones you're familiar with. Price action. When to get in and out. Support levels. Resistance levels. Price without having to look at the chart. Where it is. That's the benefit of trading the same thing over and over and over, right? That's not to say that those trades aren't providing good premium. They're not volatile. They're not in the position you like. You can't get in any of them. You gotta start looking for new stuff, right? You look for things, especially with these types of strategies, CSPs, look for stuff with high implied volatility. You look for a lot of liquidity. You look for things that have weekly contracts because you're going to be able to be in a position where in the middle of the month, you've got weeklies before and after. Right? There's a lot of leverage and flexibility on what you're able to do and the positions you can take and the management of positions that you take. Right? So there's a lot of things that go into this. I mean, I could go on and on 100 miles an hour with information that you need to be successful. And even then, it's like timing, right? Timing is impossible to hit. It's impossible, right? I did it with Clorox. I did not do it with Apple. Right? I posted 2 leaps, 1 paid, and hopefully people got out of that position. I had 3 contracts, got out with 2. I'm still riding 1, so it's down now. But I got out of those other 2 for $360 in profit on 2 leaps, right? So anyhow, what was I gonna say? So the problem when I go into these long rants, I begin to forget where the
same ticker trading again and again. Yeah.
Okay. So let me think here.
So let's say an NDM, take for example, right? It's trading at $10 right now or whatever. I want to own 100 shares of an NDM. I buy a cash CSP for an NDM, say let's say $8 a week out. If it hits,
well, time out. First thing you should be asking yourself is, what's the implied volatility on this stock before I even look at CSPs? What's the IV? and then you tell me if you want to even do a CSP.
So you don't do CSPs for low IV stocks or low IV tickers.
You don't sell options with low IV. You buy options with low IV. Right?
Well, that buying becomes a regular option, like level 2. CSPs and CCs are selling, correct?
Yeah, right, exactly. And
Yeah, okay.
that's the flip side. That's what I'm saying. There's always a flip side to everything that I'm doing and saying when it comes to selling options or buying options. There's a flip side to it. So if you don't know the flip side, you shouldn't be trading that side. That's the way I see it. Right? That's how I learn options successfully, is not to start on one side and then think I'm going to make it, and then I can't tell you anything about the other side. Most people don't know what theta does. Again, most people don't know what implied volatility is. Most people get into contracts without knowing those two very important things, and they've potentially got themselves into a contract that's already, the probabilities are already against them. Right? So
what's a good implied volatility? Like 70% above? Is that what you consider
yeah,
to
yeah.
play CC?
I mean, I'll play CSPs with 65, maybe 55 if it's like, if I got enough money to do Tesla, I'll do 55 CSPs, like
Okay.
no problem, because the
Same
premium's
thing for
still
forward call.
high for Tesla. And if you think something's going to go sideways, right? It could be giving out decent premium or okay premium, and if it's going to go sideways, you know, collect that money while it just sits there, does nothing.
Right.
Right? And
So for both,
typically when the IV is low, there's not much volatility. Right? When IV is high, there's going to be a lot more volatility because there's a lot more people involved. There's a lot of liquidity. So you got to understand these things. And CSPs benefit off of that. It's kind of a mix of uncertainty as well. Right? Implied volatility being high means there's some uncertainty. There's liquidity. There's all those things I just mentioned. Right? So you have to take all of that into account, right? If you don't understand these things, you shouldn't be trading. You should be learning. And if you're on this call, then you're doing just that. So congratulations. I'm not sure that I answered your question though.
you kind of did. But what I'm trying to understand is, I guess I may never ask this clearly, is doing weekly far off the money covered calls or far in the money cash secured puts and letting them expire worthless a good strategy?
Yeah,
Minimum
absolutely.
maintenance.
Yeah, I mean, so part of my strategy where I kind of go a little heavy on some things when it goes against me, right, is let's say I get a contract that's 20 days out. At 50 strike, it goes against me. I get 2 more contracts at 45 strike, and then it goes for me, right? I'll be able to take out the money that I made for those 2, and if theta has decayed enough for me to take the profits on that one that's against me, and I know you weren't even talking about being against you, you're just talking about expiring worthless. But if it's the strategy is fantastic, right? Number one, let's say that. But the thing is, I don't recommend letting it expire because it swings so much, especially when you're in a stock that's volatile. It's going to swing a decent amount, and you're going to see your contract value go in profits to losses every few days, right? If you see,
So you're saying swing daily, not.
Well, stuff can swing daily. Stuff can swing every 2 days, 3 days.
Right. Gotcha.
So what I'm trying to get at is, instead of waiting that whole entire time for your majority of profits if it expires out of the money. Or in 3 days or 5 days, it pumps and I see 50% return, right? That's where you get out. Not you wait the whole time. You only have to wait the whole time until you get to the profit level you're looking for. I always say 50 to 65%. If you see 65% as soon as you log onto your phone or PC or whatever, you should be taking that profit on CSPs. 50%, it's like, how long have I been in it? Which direction is the stock going? Is it going to keep going? Is there any way that I can determine if it's going to keep going? Right, because that's the hard part. It could set trailing stops on CSPs potentially as well. A lot of things you can do, right?
Right.
But the key here is this strategy is consistent, right? If you pick the right strike, you make money. Right. Again, if it expires out of the money, you make money. If you pick a wrong strike and it goes against you, you still have choices, right? You still have ways out. You can still make money. It's not like the options, the buying options. You get in, unless it goes up, you lose, and there is no out. There is no like, can I extend this or can I do this or that? No, you get nothing. You get smashed.
Got it.
So this strategy is by far one of the safest because, again, like I said, first and
And this is
foremost,
what the wheel strategy is.
well, wheel strategy is selling CSPs. You get assigned, then you turn around and sell covered calls.
Okay. Okay. Well, I still have one question on the taking 50% and get out of it piece. Let's say I'm selling a covered call, right? I buy a stock, let's say XYZ. It's at $40. I do a $50 covered call, and 2 days later it's at 35. So it goes against me, right?
So you sold a CSP at 40, now it's at 35.
No, I'm sorry, a covered call. I have 100 shares of a stock. It's at 40. I buy a strike price of 50, and I collect the premium.
So you sell the 50 and then the price goes to 35. You're benefiting on the short. You're losing on the long.
Correct. I'm benefiting on the short and I'm losing on the long. Would you recommend taking profits then?
For the short, potentially, yes.
Okay, or let it expire worthless, because typically then that means you're.
I mean, again, you're risking whether or not it goes against you now, right?
I mean, even if it goes against me, the probability, if it's a weekly, for example, the probability of it jumping is likely there. And then, at 3 p.m. on Friday, you can decide whether you want to get out or not. Because if it expires worthless, like even if it's 5 pennies or a dime out, away from the strike price, it will still expire worthless.
No,
so I
it
still
won't.
Collect full.
When you hear somebody say it expires worthless, that means you didn't have to pay squat to get out of that. Right? If it expires near out the money for 10 cents or 5 cents or 15 cents, it's worth something, right? So
okay, so in that case, does it automatically close? Let's say the price is
after expiration, yes, the contract will end. At the end of the day, it'll end. The market closes. At some point, I don't really have a time frame based on when you'll see the transactional difference, right? It takes a few days sometimes.
Right. But it does not make me pay 5 cents if it expires at 5 cents. You know what I mean?
Like it might force you to pay whatever low number you're at, right? I mean, if the contract's worth 15 and it expires and it's still worth 15 at expiration, you're going to be debited $15.
Okay, so it automatically debits for me. Okay.
Yes.
All right. That was my question. Okay.
But here's the thing. What I was saying is, if you're at, let's say you've waited all the way to expiration, you're seeing 90% return. You should take that because that extra 10 cents means nothing, right?
Right.
And
Right.
if it's that close to at the money, you should be getting out, right? Because you should be very close to full profits. You should be at 90 to 95%.
9% profit.
So you shouldn't be trying to fight over 10 little measly dollars when if you got 300 in premium, you're looking at $290 return.
Got it.
Simple.
Yep. Okay. Makes sense. Thanks, man. I really, really appreciate it. I'll shut up now. Let
You're
other
welcome.
people ask questions.
No worries. I don't see any hands. Who else wants to ask questions?
I think Giovanni and Anthony ask questions.
Oh, I see two hands.
Can you hear me?
actually.
Can you guys hear me?
Sorry, I was looking at the bottom of this. Yes, I can hear you.
I have a question. Today I did a big mistake. I'm learning. I'm new to the option trading. Today, except buying a put, I think I was selling a put first and then buying it after. I don't know what was happening because I did it. I was trying to put a put on GameStop. It was going down, but I was losing money.
Well,
Yeah,
think
man,
I
I did
was-
that when I didn't know what cash secured puts is. So you have to be careful when you click if you're using Webull. If it sells,
Yes, that's what it was on Webull.
Yep. I've done that. So
I lost $1,200 today by mistake.
yeah, I've done that with SNDL 2 weeks ago. If it says sell on a put, that means you're buying a cash secured put. Sorry, you're selling a cash secured put and collecting premium. And then if it goes against you, potentially you can lose 100% or maybe more. But I'll let Hostel answer.
Oh man, no wonder in a blink of an eye I lost all that money. But does that mean, because I was just writing right now, chatting with somebody, I think APJ, he said in my positions it should say that I have 100 shares of GME, but in my position I don't have 100 shares. He said that
Because
I
it's
don't know
not
if he could
expired
talk.
yet. Because it's not
No, I
expired.
had sold it. I got rid of it. I just sold it for the loss.
Yeah, so that means you got rid of the contract. So that's why you sold it. If you had let the contract expired, then you would have been allocated that 100 shares of GME against the amount that you had, at the strike price. Let's say you put a strike of $70, sold a $70 put and collected the premium. And if the contract expires above, whatever, you would have been assigned 100 shares of GME at $7,000.
Oh, okay.
Yeah.
I was scared. I was like, man, am I gonna wake up with 100 shares of GME now?
No. Since you sold it with a loss, you won't. Faiz helped me understand this better, man. And then Faiz's lecture, he goes deep into some of these, same like Hostel.
Okay.
Yeah, and read up a little more. There are videos on YouTube.
Okay. Yeah, I
GameStop
just
was
wasn't paying
probably-
attention.
GameStop was probably the riskiest trade you're going to make today, and not even the pros trade GameStop. And
But
you
I did a
and you have
put.
no clue how to how to play it. So lesson learned, man.
Yeah.
Learn how to trade options first before you jump into the riskiest trade of the year.
Yeah, man. I did it by mistake because I wasn't really paying attention. And I was actually looking because I was gonna put I was thinking about putting a call on Tesla. So I was just looking, trying to understand it. And then when I went to GME, I clicked puts and I realized that I was selling it. I was selling while it was dropping. So I guess it's the opposite. When you're selling a put and it goes down, you actually lose money.
Yeah.
Correct. Because you collected premium on that put. So when you're selling a put, you want the stock to go up. When you're buying a put, then you want the stock to go down. And
see if I was
the case with covered calls. When you're buying a call, you want the stock to go up. And if you're selling a covered call, then you want the stock to go down.
This is why I said
Wow.
earlier that you've got to understand the option selling side before you go to option buying, because there's key things in option selling that you'll
It's
learn
just-
that helps you
Mhm.
become a better option buyer.
Yeah, I was on the phone with two of my friends on three-way, and I was just kind of not paying attention. I just wanted to be sure that's what it was. But man, it's just like that other guy was saying, oh, that he lost 2,500. What should he do? Like it hurt me. I'm not gonna lie, but I'm like, you know what? There's more opportunities later on, so they forget it. But now I need to just understand, I guess, the options better. Now I understand it, and just gotta pay attention more. And
I got a handful of videos on my channel that you can watch that may help some of it. Like Greeks, go watch the Greeks video. Try to understand Greeks.
I wish I was paying attention and I would have put buy a put, because I did it when GME got down to 150, then it dropped almost all the way down to 113.
You learned an important lesson, man. Like, don't sweat it. I lost money as well, but it was an
Yeah.
expensive lesson. But believe me, it will make you a lot more money if you understand the CSP and the CCs better. That's a lot less riskier and a consistent strategy.
Yeah, thank you. Yeah, I appreciate. Yeah, that's true. It was it was an expensive lesson.
It was an expensive lesson. Yeah.
And when I was watching a YouTube video, just like how you guys said, watch the video, I remember the guy on Webull. The guy was giving an example on Webull. He's like, look, make sure you are clicking the correct. Make sure before you confirm. And after I did it and I lost the money, it's like I hear his voice in the back of my head about to make sure. And wow, I could have made a lot more money if I would have been paying attention, except selling a put and bought the put instead. But yeah, just like you said, it was expensive lesson.
All right. Anthony, you have a question.
Yeah, sorry. Hey, I just have a question, more or less about like position management. So I've got a contract on SQQQ as like a hedge. Then I'm also in USO, which has been doing great. So those are kind of like my hedges, but my hedges aren't outweighing like what's being sold off, like my other positions. What do you think is like the best way to manage down positions? Like I still have some cash on hand. I have my hedges, which are doing okay. Do you think we're in a position in the market where maybe I could start to average down on some of these positions to get a lower average price per contract, or just kind of wait it out? I still have a good couple months on most of these contracts anyways.
They're all
bought also
contracts.
What is it?
They're all bought. Like you pay.
Yeah, they're all purchased contracts. I don't sell. I mean, I mainly I just joined the this whole chat thing, but I've mainly been following Zabes or Cal. So I kind of follow their call outs and see what they're doing, and I've got some hedges set up, but arguably not enough.
Yeah, I mean, hedging is a tricky business. I think 20% of your portfolio should be hedged.
Okay, that's a good thing to be told. All right.
But I mean, it's different for every trader, right? I mean, if you follow the rule of 50% of your account in the market at any one time, no more than, you're hedging right there, right? So, and then if you do 20% of that 50% that you've got in the market, so example, you got 100K, you only allocate 50K. Now we're looking at $50,000 worth that you got to hedge 20% worth. So we're talking, $10,000 worth that needs to be hedges. Right?
Okay.
So every time you get into a position, like let's say, and it kind of goes by dollar size, I feel like. So like if you get $1,000 position, like you buy something that, let's say you buy a SPY, or no, let's say you buy just triple Q, and it costs $1,000, and inverse of Q or triple Q is S triple Q, and its contracts are at $25, right? So you're gonna want to consider doing 20% of that 1,000, if that makes sense.
Yeah, that makes sense. It's kind of, I feel like it might be a little, what would you say, maybe trickier with individual stocks, because although the general market's been selling off, I do see some individuals doing well, like particularly bank stocks are doing good. But I'm more in the tech sector right now, which is kind of the one getting hit the most. So I don't really know if, like, do you think maybe I should, I know this question's kind of more personal to my account, but maybe someone else in here is related to it. Should I like keep these hedges? Do you think I should always keep hedges in my account, or should I sell for profit what I have hedged and then use that as well to then average down into my current positions? Or should I just leave my current positions and ride them out and, you know, continue checking what Cal and Zabes are doing with these particular plays?
Well, all of the above, number one. Number two, as far as adding to positions or riding it out, did you have a percent strategy based off of profit taking in place, or you're just kind of going as it goes? And you know, if it does 100%, awesome, or if it's only at 50% or whatever, you know, did you have a strategy as far as exiting contracts in general? It doesn't have to be hedges or long positions. It's just in general. Do you have an exit strategy for percentage that you take off of contracts when you're in profit?
Yeah, I usually like to start taking after 20-30% is typically where I like. Although, again, I have a small account and I can't day trade, and I kind of used all of mine. So I would have ditched a couple of contracts, but I wasn't able to.
What broker are you using?
I'm on Robinhood and Webull. I want to switch completely over to Webull, but I'm trying to wait out some of my positions on Robinhood before completely exiting to Webull. Yeah, I don't want to like exit right now and blah blah blah. You get it.
Right. Yeah, I mean, I would say that with the hedge, if it's 20% allocation, that is, you could look for double whatever it is that you get when you're taking long positions. So if you said 20 or 30%, now with hedging, you should be looking for 40 to 60%. Right. So
like profit take on 40 or 60%.
Yeah, because if the market's falling hard, so the hedges are there to protect you from dropping hard.
Right.
Because they're gonna pay out, whereas the other ones are gonna not pay out. And
right,
you don't want to do 50-50 because now it's super heavy hedging. So that's why I say 20% is a fair number, because if you get the gains, 65% gains on the hedge, you're doing somewhat closer to as good as that long position would had you taken 20 or 30%, right? So you just got to make sure that you stay on top of these positions and you try to manage them daily, especially if it's against you. How much theta decay is against you? Do you have the ability to roll to another contract that's a month away if you're 3 months out? And it's at a super, super low. Like, let's say right now we feel like it's going to come back up and start going back up. You could be like, well, if you're in April, you could probably roll it to June or July, for a much cheaper, better price as far as the July contract goes. So you're going to pay a debit in this scenario, but you reset your theta value, you reset your losses on theta, you reset potentially what strike you're on. I mean, you could even potentially lower your strike, or you could pay more money for a lower strike.
Right.
So that's all optional. And if you bought that position based off of support from the get-go, and then it went against you, it's just trying to stack the probabilities in your favor. Right?
Yeah.
And that's the goal here, is to stack probabilities, compound your probabilities, because that compounds your money. right? So that's the goal here, is to see compounded returns. So just make sure that when you get into these positions, you have the protection, right? The type of trading that you're doing is different than what I do. So my strategy is different, protection is different, kind of thing.
Right.
So, yeah, did that answer your question?
Yeah, I think so. I guess the only other question that came up would be when you had said that you'd roll to a further date. Would you sell the contracts then, that like as for a loss essentially? Would you sell those contracts that expire in April or whatever, and then just buy the June or July contracts as a way to reset your theta, like you were saying? Or would you keep
Yeah,
those contracts anyways?
yeah. So what you would do is, I don't think that Webull allows you to close it or roll it like TOS. Like TOS, I can just right click, touch roll, then it just goes to the next contract, gives me my credit, I'm done. Whereas a
Oh,
Webull, I think you have to actually manually go through the process. Right?
yeah.
There's a difference here. It's the same
Can you
exact thing, but there's a difference, right? So where on Thinkorswim, where I do it and I roll it and it's all kind of automated, right? It's unrealized profits and or losses, right? But if you close it out in Webull, you've realized a loss, and then you go to sell the next month contract that you wanted to roll it to, and it gives you more premium than what you just sold a loss for. Right? So let's say you sold that loss for 250. Now that next contract or the next expiration ahead is paying you 300 for that same position. Well, you didn't lose. You just moved the time frame ahead, and you gained 50 cents to do that, right? But when you look at it on paper, it says you lost.
Right.
so Hostel, can you make a video about how to roll over a contract on TOS? I tried to understand that. I recently moved everything over to TOS, but I haven't able to figure out how to roll it. I guess I was using Chase, Uinvest, and Weibo, and there is no concept of rollover in both of those platforms. So I don't know how to roll over a contract on Thinkorswim.
Yeah, so I mean, it's pretty easy, honestly. But it depends on the position as well. Like, what is the kind of position that you're doing, right? You doing CSPs? You doing covered calls? You buying options? I mean, there's a lot of videos that are probably going to have to be made to fulfill all those scenarios.
Yeah, maybe I'll look up first. Yeah, right.
Um, but I mean, tell me what your um, t tell me what your sorry, you guys still there?
Yeah.
Something's
Yep.
happening on my screen.
Tell me.
Um, tell me what strategy you're doing, and I can tell you quickly.
So same. Let's say I'm doing a covered call, right? And it goes against me, and it actually goes up, and the premiums go up, and it's close to the money, and maybe in the money as well. I don't want to close it to debit it and then realize my gains or losses, and then or buy the shares. I just want to roll it over, right? Let's say for a covered call, to talk about cash secure post next. So how do I roll it over without realizing the profit or a loss? That's my
You
question.
right
And
click it,
collect more.
it says roll this position, and
You
then
right click on the bar down below in the bottom where you fill in the order.
yeah. So
Okay.
here,
I don't think I've seen that option. So
let me share my screen. Hold on a second. Actually, is it sharing?
it's not sharing yet.
No, it's not. Oh, all right. Should be
Now
sharing.
it's sharing. Yeah.
Let's see. So you see here, I can create rolling order,
Oh, okay.
and it turns it into a calendar, right? And then
When you click that,
let me move this, and then it pops up down here, and it shows you that it'll automatically put in the next following expiration. And if this says credit, that's what you're looking for when as far as uh, covered calls. You need to see a credit here. You don't want to pay debit to roll. Never pay debit when you're option selling.
So how do you make it credit? Like, let's say, for example, for this example, right?
Well, I mean,
If
it just
you
depends on how close it is to, um,
the money.
yeah. I mean, how close is it to the strike position? I mean, how much implied volatility is there? You know, I mean, all of those things that I mentioned, they're all
So
involved.
theoretically, you can keep rolling over the contracts and collecting premium and never cash it out.
Yeah, you could theoretically if you had the pricing right, if you had the strike in the correct place where you could take in additional credit. Yeah, absolutely you could.
So let's say I bought a PLTR right now is $25, for example, and I bought a covered call for PLTR at 26. Tomorrow it's at 27. I can roll it over to the next week to $30, collect additional premium on top of the $25 premium I've already collected, and do the same thing again as it goes on and on and on.
Well, you know, you're talking about moving 5 strikes, and you know that's not something that you can easily do, right? So
Okay.
don't think that way. Don't think you can move 5 strikes. And I mean, yeah, you might be able to get premium. It depends, right? It really depends. But you know, on average, you might see small premium by doing that, especially, you know, if you're not, if you're going a month out, if you're going 30 days out, then you should see some kind of profit there or premium. But if you're trying to do weekly stuff, that's not going to happen. You can roll 1 strike. And that's what I typically do. If I'm down on something and I need more time and it's a weekly, I'll roll 1 strike down and try and take in $10 or $15 in credit. It's fine as long as I'm not paying, right? Because
Got it.
that particular position, when I had something like that happen to me, you know, I had a $780 premium on it because I had rolled it 2 or 3 times, started at 300, and rolled it to where I was at $780, and I ended up. I mean, it was a falling position, mind you, right? But it was all weeklies, and I rolled the contract 3 or 4 times, and finally one day it pumped up to where it was at like $220 in premium, and I'm like, all right, I'm just gonna take that, right? Because I get my money back, I get this I get some of that $780 premium, so I'm in profit, you know. So you know when positions go against you like that, um, you got 2 choices, right? You got either, you know, if you can manage it and roll it out and collect credits, then you know at some point, honestly, if it was a CSP, you know, I could honestly roll the same strike every single time I need to, as long as it's within a certain range and take in a credit. And ultimately, at some point, that credit that I've taken in is going to get me down to that break even price of the current stock. So if it's at 25 and I did a 30, I took in like 100, $200, and then I have to roll it 4 or 5 times because it stays down at 25. You know, and I can take in 25 to $50 each time. You know, then that position becomes like a $350 position, $400 position. And, you know, even then it's like, how long do you really want to hold it, right? Because at some point in that time frame, after building all that credit, the value is going to come up and you're going to see green, right? If you're able to build value in a position when rolling, especially well when selling, option selling, if you're able to build value in a position when rolling, then you increase the percentage gains in the sense that when the stock goes up 5% and the price of the contract goes up 5%, before it was $200 of 5% or 500% of 200. Now it's 5% of 350, right? Very different number. So there's a lot of ways to hedge. There's a lot of ways to roll. There's a lot of ways to manage positions. There's a lot of ways to skin this cat. And if you're in this game and you've got a strategy that's just do one or two things, you are way too far outside of reality when it comes to stocks. And you've got to educate yourself further, understand everything that I've said. If you could sit through this entire conversation and understand everything that I say, you are well prepared to play the market because you know each and every position of um, each and everything that you see on the option chain. There's just so many things that you have to know. Right? So I
Right.
cannot stress that enough.
Right.
All right. I'm going to stop sharing, but anybody else have questions? Oh, wait.
I have.
I'm sorry. Hold on. There's actually a bunch in the chat there. I apologize to the folks that were chatting. Wasn't even looking at that. So let me quickly go through those. I don't know who iPhone person is, so skipping that one. I think the market tomorrow will probably be red. Somebody asked what I think about the market. How to build confidence in options trading. Everything I've gone over pretty much sums that up. So I'm just rolling through these questions here.
Yeah, and you'll see a lot of my questions in there too when I was talking to APJ about the question I had asked you guys.
Okay.
Is there a possible way on options? Can you put it might sound like a stupid question, but is there a stop loss? Like you could put a stop?
Yeah, you can put stop losses on positions, certainly. Now, they don't, with options, they don't always work as intended. Because the contract price can quickly fly past that spot that you want it to stop. And if the price zooms past it, then the stop is not even going to get initiated. It's not even going to see it.
That happened to me like 4 times. That's why I don't even use it too much on the stocks. Like I don't even really trust it too much. Because if it, even in a stock, that if it zooms right past it, just doesn't even care about your stop loss at all. And they'll just be hanging up there.
Right.
So understand.
I'm still going through all these questions. Let's see, Gilbert.
And one more question. What do you think about what's going on? Well, I guess the whole market is red. Well, the whole market is actually red, but what do you think about the Tesla situation? You think they're trying to correct the price on it? Because I hear a lot of people always saying that it's overpriced here and there.
I'm not worried about that. I think they're just gonna have a correction like everything else does. Tesla's gonna keep running strong. It's just gonna have its correction, then it'll run some more.
You think it'll get back to 800 again?
I think Tesla's gonna do the same thing it did last year, which is basically go to $2,000 and then do another split.
Oh man.
Yeah, I think it's gonna hit 1,300 before it hits 500 as well.
I don't think it's gonna hit 500. 615 was the number.
Yeah.
I think that's it. It's not. I mean, maybe it'll hit 500s. Maybe it'll hit high 500s. But everything requires a correction. Nothing can keep going up. So.
Wow. And I got 25 shares. I got 800. I was scared.
But in long term,
crash.
You'll be fine in long term, man.
Yeah.
Since they're shares, it doesn't come with an expiration. Just write them out, and if you're not using borrowed money to buy shares, then you should be fine. I mean, it's eventually some point. It may take 6 months, year, or whatever.
I was thinking about waiting to see how high it can go and sell it, some of it at a loss. Well, selling it at a loss, I don't mind, and then wait for it to see how low it can get. But the last time I did that was when I used to have Tesla at 380 a share, and I sold it, and then it just kept climbing from then, and I couldn't even catch it. So now I'm here buying it at 800.
So I'm gonna go through a question here that Tyler Smith asked. What things should I be learning to get good with shares? Um, I would say that you should learn support resistance and trend analysis. Those are going to be very important with trading shares. Hopefully that, hopefully Tyler, can you hear me? Looks like Abby kind of answered that as well, though. Johnny asked, would it be wiser to buy to close at expiration with covered calls or let it expire worthless if it's out of the money? I honestly never let anything expire out of the money because the stock can move so quickly, and you'll be in the position where you were up, now you're down, and that's happened to me. So, set a percent level that you want to take, that you're happy with, that you think's a good number, and just roll with that. Right. So, yeah.
It's hard to keep that discipline until until you start taking losses. It's hard to keep that discipline.
Teaches you things. That's why I said suggested shares. Okay. I think somebody else had another question as well before I went to the list on the chat.
I had one last question. It was regarding penny stocks. So like Joe alerts a lot of penny stock with detailed analysis, and some of those penny stocks have options, right? So for example, AEZS.
I'm gonna stop you right there. I don't do
Mhm.
penny stocks. I think they're too risky. I would
Right. No,
recommend
from a
against them.
strategy perspective, just from a strategy, if I may ask. So let's say AEZS, I bought it at 1, I anyways want to sell it at 2. If I buy a covered call for AEZS for, let's say, a month out, for example, and then it does hit, is in the money, can I sell my shares if I anyways wanted to sell it at $2 without, paying the debit on the covered call that I bought, or do I need?
You can split it up for sure, but I wouldn't. I don't know why you'd want to do that.
Because I anyways wanted to flip it at $2. Like if it, let's say 2 days later it moved quickly and it's at $2, which was my price target, and it hit, right? And I also collected premium on it before it hit. So my question is,
why then do that? Why not just let it expire, and then they take the shares?
but it can move back down as well, right? Like,
Okay, so then
if it,
you'd have to close both positions out to be at the profit level that you saw before you wanted to get out.
so
Like
basically I'll
you
have to
can't
first,
leave the short open, because if it goes further against you, you're just going to get crushed. Now you have no protection because you sold the shares.
got it. So I'll
It's
have
called a
to
covered
pay the
call.
debit. Yep. So I have to pay the debit, close the
Never pay
position out, take a
debits.
small loss or whatever
Yeah. Okay. Yeah. Sorry. Yeah.
for a covered call. Yeah.
I mean, yeah,
Take the
you're
loss.
gonna have to pay debit to get out. I mean, your shares should be at 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 expiration. Your shares should be worth a little bit more than the contract that you have to debit out.
Right. So eventually I need to make money. Okay. Either to sell the shares or let it expire. I understand. Okay, makes sense. Thank you.
No problem. Okay. Who else? Not sure who was talking just now. Still got a decent amount of folks in here. Anybody have any particular topics that they have trouble with? I can point you to videos, or I can discuss it if I don't know of any videos. It's funny, I actually wanted to discuss rolling contracts tonight and hedging, and then all the questions have been about that. So that's pretty awesome.
I have a question about maybe with the PFE, the Pfizer. I've had it for quite a while. And I have a lot of shares. What do you think? You think I should just hold it for a long term or just sell it for a loss and then just use the money for something else? Because I actually have like a kind of like a lot of money into there. And I feel like if I could use it for something else and make some money somewhere else.
I mean, I'll be honest with you. You know, what I would do is going to be very different from what you would do. I think you got to figure out what's going to work best for what you're trying to accomplish, right? And formulate a plan and a strategy around that goal. I mean, you know, I could say I'd get out of it because, you know, I like to do cover or cash secured puts. I like to be in and out of stuff. I like to recycle my money quickly. My strategy is to compound cash flow, right? Whatever you're doing, most certainly, I guarantee, is not what I'm doing. So, you
Yeah,
know,
I'm actually trying to.
it's impossible for me to be like, hey, okay, you should do this, because
Yeah,
you know I'm not in that position. I can only tell you what
yeah,
I would do with the money in my position. You know, my mindset is very different from yours. Right? I've got different goals than you do. Maybe we get the same, but I'm pretty sure that the way we're going about it is different. Right? So, and everybody's unique. We all have different things that we like to use, and you know that's why it's so hard to give someone advice on particular things of that nature, because it's just so unique to each person. Each human has their own specific interests. But maybe I answered your question. Let's see, Edson, you wanted to ask a question? You got your hand up, Edson?
I think, Edson, you can unmute yourself. I think for Carl, he unmutes it generally. So.
Well, I can. Let's see.
Is there any videos maybe you'll be posting or any videos you would recommend me to watch about option? Because I see that there's a lot, like there's Cover Stock, Straddle, there's a lot with.
There's so many out there, man. I mean, I think instead of trying to watch a bunch of random stock option type stuff, you should figure out what it is that you want to do, how you want to achieve that goal, and then start looking for a strategy that fits that goal. Right? That's how I figured out how I wanted to do what I wanted to do. Right? I didn't just jump into this and be like, okay, you know, I'm gonna do this and it's gonna work. You know, I went through so many different things and crossed off so many things off my list. You know, and I went through so many different types of videos, none of them related with the last one. You know what I mean? So that's another one of those where I'm like, I really can't tell you where to look. It's just going to take you time to figure out what it is that you're trying to accomplish. I think that's the best way to approach this and change your mindset, and instead tell yourself, what are my goals? What am I trying to achieve? Do I want to quit my job and do I want to do this instead? Then what's going to get me there? What's my goal? What's my plan? What's my strategy? Um, do I want to trade for a living? What type of trading can I do to do that? How much money do I need before I can trade the way I want to trade and make enough money to where I can sustain my lifestyle? Right? You know, you got to answer all those questions before you start answering or asking the questions of what should I do about this option or that option, right? I think that's the
Yeah.
one thing most people leave out is the goals. People get in here and want to make money. They got no goals. You get nowhere with no
Yeah.
goals. That's a
That
fact.
exactly. That is my exact goal. That I want to do it actually for exactly what you said as for a living.
Yeah,
I
and
just
you know, you got to find a strategy that's going to work for that, right? And
yeah.
buying options isn't it. I'm telling you right now. I mean, you can make that part of your strategy, but just solely going out there and buying options, not going to happen unless your name's Tilio.
So how do you recommend? What do you mean? As in buying
There's
what
other
stock?
trading strategies out there, right? It's not just buying options. There's so many different strategies out there, right? You have to explore them. You have to go through them. You have to um, learn them. You have to trade them. Go on a virtual trading platform and do them. This helps you understand option change. This helps you understand bid and ask spreads. This helps you understand how implied volatility works when it goes up and down, when it does the contract pricing. I mean, there's just a lot of things that you can learn when you go out and you paper trade on Thinkorswim, for example, and you try out all these contracts. Just see what they do. Just see what
Okay. Yeah.
happens. It's fake money. See what
Yeah.
happens.
And on Webull, can you trade options with paper trading?
Only shares.
Yeah, that was my question. I think only on Thinkorswim allows you to do paper options on paper trading. Webull and no other platform that I know of allows you to do paper trading options with paper trading.
Oh, okay. I have Thinkorswim, so I'll actually I'll try to use it and paper trade with it. And I had another question and I had completely forgot.
Sure, go for it.
I completely forgot what it was. I'll get back to you as soon as I
Oh,
remember.
okay. Okay, Edson, your hand's still up.
What's up, man?
How's it going?
Good. Yeah, I just started doing option trading, and I just had a few questions on what platform is good to learn about the candles. I just never got that.
Yes, that was the question I have. That's exactly what he just asked about the candles and reading the
Candlesticks,
charts.
they're more. It's not necessarily the broker that you learn it from. I mean, obviously, you need to go pick a broker that you can look at candlestick chart patterns. Robinhood is not it. Um, but secondly, there's actually a ton of YouTube videos on candlesticks. I mean, you could start with my video just based on the opening, closing of candlesticks, right? It tells you, you know, what to expect with the candlestick as far as when a green candlestick opens and closes, and when a red one opens and closes. I recommend you watch that video. But that's the start of it, and then there's candlestick patterns, right? And this honestly is also more advanced in my opinion. Um, I consider knowing how to read the chart like support and resistance to be beginner, right? If you can't do support resistance, then you're not going to be successful. Um,
Right.
and then it's going to be things like trend analysis and chart patterns. It'll be things like seeing indicators and or seeing certain things on indicators that are your kind of edge. And then it comes to the advanced level of knowing candlestick patterns because those are very tricky. They're very, um, you could be seeing something that may not be what you're actually seeing. So that's why it kind of gets tricky, right? Because unless you know everything so well and you see it in your sleep and you see that candle and you're like, oh, that's what this is. Unless you're able to do that off the top of your head, off the cuff, then candlestick pattern trading and understanding is tough. So that's why I consider it to be more advanced because there's all these other things that I think you should know before you start trying to do candlesticks.
Yeah. Well, I've been using Trading View, I think it's called, and I've just been trying to look at what it's all about.
I mean, yeah, TradingView is decent. Some people use that. I mean,
Yeah,
I'm personally using Thinkorswim. It's
yeah.
the best platform out there.
Thinkorswim is that's a software or that's a
You gotta
uh
download it.
oh, okay.
But I mean, if you got a TD Ameritrade account, you can log into it.
Oh, okay. Yeah, I just got Robinhood for now, but I heard TD is good though.
Yeah, if I were you, I would probably go to Webull first.
Weeble,
It's simpler.
yeah.
I think that it's easier to understand. I mean, Thinkorswim's really complex. Um,
Mm,
so I mean, I say Thinkorswim's the best. Um, but Webull I think is easier to learn. Again, Thinkorswim's so complex that you could get lost, right?
Yeah.
Um, but and there's other benefits to Webull, right? I mean, I uh, there's no contract fees, right? If you're doing options, I can even give you a link and you can get a free stock for using it, just like I get a free stock, right? So I mean, there's just small little things that make Webull okay. Um, I don't see any issues with filling and getting orders filled. I use Webull sometimes. I use Thinkorswim. I use Schwab. All of them really don't have issues with filling. But Webull is limited. It's a newer platform. Is limited. You can't do like standard deviation channels. You can't get those. Can't do spreads. Like I can't do calendars. I can't do diagonals. Can't do uh, regular credit spreads. I mean, but those are more advanced strategies. Um, so, uh, you know, that's what I would suggest. Webull is a great platform, I think, for beginners, especially coming from Robinhood. Um,
right.
it's simplistic. It's easy to get the concepts of what you're trying to understand. And then once you have all of that well understood, then you can move over to Thinkorswim because you'll be able to look at the screen and go, okay, I know what this is. I know what that is, instead of trying to figure out the other hundreds of things that Thinkorswim has.
Right. Um,
You're right on the money with that, Hostel. I recently moved to Thinkorswim from my Chase, and then I use Thinkorswim and Webull. It's very, very complicated, Thinkorswim as compared to Webull.
Yeah, super complicated. That's why I don't even use it anymore because it's
You
so complicated for me. I'm like, you know what? Let me just use Webull a little bit easier, a little bit more simple before I start losing money because I don't even understand what's going on with this.
Well, the beauty is if you learn it,
Yeah.
then it's fantastic.
You know
That's
what I
why
like about TD Ameritrade? That you can call them actually and you could set up a course, like a class, and they'll call you and teach you everything on Thinkorswim. They'll teach you everything on TD and Thinkorswim, whatever
Yeah,
questions.
they got great education. It's there if you
Great.
want it.
Yeah. That's why I like them. That's the main thing I like about them. That's the only thing I don't like about Webull because you can't really call them. They have a number there and they'll keep you on hold for 2 hours when you're messaging them. Like it's really complicated. So that's what I like about TD and
Well, I
Thinkorswim.
mean, again, it's a new company. You can't expect too much from a new company, unfortunately. The ones that have been
Uh,
around for a while, they got teams. They got like a help desk, and they got level two or level one, level two, and then they're like margin team. And they've got multiple groups of people that answer calls, whereas Webull, they don't even do spreads. They don't even do margins. They don't even have a margin team. So they don't even have very complex traders or skilled people, if you really think about it.
yeah.
All right, so
The
it looks like okay. Ashley had a question. Ashley AB. Let's see.
Yeah, mine was a scenario question that I have. I got into CCIV at the top before the announcement, and it dropped dramatically. And so I've been trying to get some experience sharing on whether I should average in or sell covered calls at very low premium.
You could sell covered calls. So have you averaged in yet, or are you still?
No, I didn't. No, I haven't bought the next 100. I just have the first 100.
All right, let me take a look and see what CCIV looks like first. Yeah. Okay. Shit. I don't know. This market's crazy. Let's just assume that you bought 100 shares more. Yeah, and your break even comes down. It'll honestly be right in dead center of where your break even is right now to the current stock price or whatever price you enter at. So it'll be dead set in the center of that. I don't know what the premiums would be on something. Let me see. Let me take a look at the premiums.
On Sunday, when I looked at them, it was $12.95 if I sold a April 16th. It was the April 16th for 95. It would have been $1,200. But because the stock dropped on Monday, those premiums are now like very, very low.
400 if you're looking at March.
Not even.
19.
Not even. Did you see that?
Well, I'm talking about at the money, not. I mean, what's your So what you could do? So you want to try to go with the shortest expiration. You want to try to get the stock price. So you want to try and get the break even somewhere. I mean, 200 shares would probably be ideal, but I wouldn't recommend throwing money at it like that unless you've got a decent amount. Let's say so March 5th is out of the question. Strikes just don't go out far enough. See 27. What's your break even?
52.90.
290 divided by. Let's see. That's not it. $52.90 to minus 27.82. It's 25.08 divided by 2. 1254. 27.82 plus 1254. That's not right. 1254 plus 27.82. So break even would be right at $40. $40.36 if you bought it off the price right now, the 100 shares. So March 12th doesn't have the 40. This one does. March 19th, you could sell the 40 strike and hope that it comes and takes your shares away. I would try to wait for a pump though. Wait for it to pump. Maybe up to like kind of see like to 29, 28 and a half to 29. And if it does that, you're looking at, let's see, 20 or $30 difference. Not a lot, but it helps. So it probably puts you around 220 to 250 at best on a pump. If you're gonna get into it, that's when you want to do it, right?
You speaking about selling the call?
Yes.
Or buying the extra 100?
Selling the call. So I don't want to tell you when to buy the extra 100. I mean, right now, I'm just saying hypothetically, right now, if you buy extra 100, break even's at $40.36.
Right.
So that's your call. What I can tell you is you can get $190 right now if you bought 100 shares and sold. Now you can sell 2 contracts, mind you, but your break even's lower. So you can sell 2 contracts, and if you did it right now, it's $190. If you wait till it does some kind of small dollar pump, you could probably get another $30 to $40 for it each contract.
$30 to $40.
Yeah, wait for the pump though. I mean, it went down 3% today. Let me see.
I'm just trying to understand what you just said. So I'm looking at a options tree right now. I see sell the call for March 19th, $40. It would be $1.93 in premium coming back if this was real time.
Yeah,
So that's $193
for that 100 shares.
for that 100 shares. And so if by the 19th we hit it, then my shares would sell at 40, and I would just take a loss right there.
Well, it wouldn't be a loss. You would basically go. So let's say you got 196. So I can make the math easy. Let's say you got $196 for that position, and the price of the stock went to 40 and took your shares away. Number one, it would give you $4,000. Number two, you would keep the full $196, right? And your break even was 40.36. So you subtract 36 from that, and now you're at 166 instead of 196, right? So that's your profit, 166.
I think. Well, my actual my average is 52.90.
Again, if you bought 100 shares and your break even went to 40.36.
Okay, so yeah, I thought you said we weren't doing that just yet. Okay.
Well, number one, you're gonna have to buy shares, right? If your break even's at 52, I mean, I guess you could sell a 50 strike for 120, but I just personally like buying more shares, getting the average price down, premium gets better, right? And that's what I'm interested in. And if you can,
That's what I've asked a couple people, and 2 people told me don't buy the shares yet. And so that's why I wanted to hear what you had to say, because a lot of time when you speak, I follow your chain of thought simply, and it makes sense to me. And so I was thinking earlier today, spend $2,500, bring my average down, and then now it'll be quicker for me to get out once it does have a pump.
yeah, I mean, I would totally do that if you got the capital and it's
Yeah.
not going to be like half your portfolio. Then yeah, absolutely. I mean, if it's like 5% of your account, then totally do it. But again, it's based on what position you're in as far as that goes. But yeah, I would definitely do it.
If I can afford to put the 25 over there and don't worry about, because I think they're going to put out cars. I think people are going to buy the cars. I think one day the stock will be worth $100.
Yeah, I mean, if that with that type of mentality, then shares are the way to go, right? You could totally buy the shares and play off resistance levels, although there's not too much resistance except at I'd say right at 35, 50 and up. There's resistance points. So you could say, buy 100 shares, stock price goes to 35, sell a cover call at 35. Or when it hits 35, sell it at your $40 strike. Because then in that scenario, we're looking at at least another 100.
Can you show us that on your screen, like what you're saying about these resistance points?
Sure.
Thank you. And then, like you said, I could sell 2 cover calls in the meanwhile, which could end up being a little less than $400 in credit.
Yeah, I mean, if so if you're looking at my screen here, we got a resistance point right about here. All right, let me get a little bit closer in as well. So we got a couple of resistance levels. Let's see. do here actually. There's multiple resistance points here. All right, so let's say you buy 100 shares, then your break even hits $40.36. You can sell 2 contracts. If this pumps up to 35, you can sell the 40 strike for 200. It'll probably be worth 250 to 300 at that point. Then you could sell, and honestly, if IV climbs, you could even get even more, right? So that's probably what I would do. I feel like it could fall some more.
Yeah, so wait to get a better average. Just keep watching the RSI and the MACD and the stochastic for it to fall below and try to get down at the bottom.
Well, I wish I could say yes to all of that, but I can't. Ideally, what you want to do is your break even follows the stock price downward, right? So not a big infusion at one point, more like small amounts as it goes downward. So you can have that break even follow it all the way, however far down it goes, it would, instead of being like 50% down, you're down 15% or 20%, right? That's
Right.
the idea of averaging down, in my opinion. So, one thing I could say is if the capital isn't really an issue, buy 100 shares right now. If it drops again and goes down to that, what level is that? If it drops down to like $18, then grab another 100 or grab 200 at that point.
Right.
That's how you get out of plays quicker. And if you're in something, you need the capital to get out of it.
Just keep averaging down until one day I got enough to sell them, make $1 and go get an ice cream cone, right?
Yeah. I mean, just never take a loss. Never take one on the chin. Always be willing to manage that position so that you don't take that loss, right? Because the goal is to take profits. I mean, there's that argument out there where, well, if I have to sit in this position for 2 or 3 months, why don't I just take the $100, $200 loss and then go make it up somewhere else? Yeah, there's that argument. But consider this: when you practice good practice, such as not taking a loss, imagine that you're rich. You've got $5 million. You can afford to sit on a position. And now you're trained, well trained. You will train yourself to do just that. Now you know how to manage and massage that position and make profit while it sits there, right? So that's my mentality behind it: is never sell for losses, especially when you're doing shares or CSPs or covered calls. Never ever get out of a position as a loss, because there's multiple opportunities to get out with profit, right? Multiple. It's just a matter of knowledge, education, and position management. And same goes for this covered call, right? You buy 100 shares, it drops, buy another 100 shares. Now you got 3 contracts, and your break-even price is probably now at 35, right? So, and now you can sell 35 strikes. So, and that's the goal: is you want to average down to stay in the game, especially with covered calls. If you didn't average down with covered calls and it drops again, you cannot sell your strike for anything. Right now, you're only getting 70, 80 cents for it. And it's a gray area because it's a 50 strike or the 55. You don't get a 52, right? So you're going to have to kind of take the 50 because the 55 definitely isn't paying. So again, it keeps you in the game in these scenarios where you want to sell covered calls on it. All right, buy some more shares so you can get closer to half the money. So then your premiums go up, and your aggregate break even goes down. And again, you got to also remember if you're taking in credit on this position, let's say it costs you $5,000, you've taken in $500 on a covered call, and what was I going to say? The price of the stock is right at 45 from 50, and you've made 500 off of covered calls so far. If you feel like it's going against you or going further down, you can always get out right there at 45, right? So I mean, even if the stock, so let me back up a second. What I meant was, if the stock price is at, no, I think I had it right. Now I'm thinking about it. I apologize. So yeah, if the stock price is at 45, your strike was at 50, you got assigned at 50, you've taken in $500 credit or premium for that. You can technically bow out at 45 and break even because you took in that premium. So again, so many ways to approach this, and the more money you have, the more ability and leverage that you have to do multiple different types of plays. You have foundational types of trading, and then you have the trading that kind of makes your account either grow faster, or it kind of just spreads it out so that it's not all concentrated down one alleyway. There's a lot, right? So the more money you have, the better position you're in. And when you want to build more money, you need consistent returns. You can't be doing these GME plays. You can't be getting into option buying and just losing money, right? You have to be able to put yourself in the position to always make a return. FaZe likes to call it market rent. He likes to get his rent from the market. Not a bad analogy. You're basically getting paid rent from the market with your money in there, right? If you don't have any money in there, you're not doing anything with it.
That's it. That's it. Get the money working and keep the money working.
That's right. And, part of me, all of my accounts at the top so far, the highest I had them so far, 3 accounts, was 103,000. And I'm sitting here thinking, like, I want to put $103,000 into the market so that all of my money is working for me. But I know that that's a bad idea because, you go too heavy, it goes against you. Now you're in a tough position. So every once in a while, I'll go heavy a little bit, try to take advantage of the leverage, right? Try to make, instead of making, 2.5% to 5% a month, I want to try and get 8, 9%, 10%. It's hard. I'm not gonna lie. It's not easy to get. And when I say 5%, I'm talking about 5% on 100K in a month.
Right,
It's $5,000.
It's easy to make 5% on a small amount. What happens is once our accounts get big, we're gonna have to be very selective on how we're telling our soldiers to march.
I mean, even then, it's like, the larger the account, though, the more, like, so here's my goal. I get 500K. I'm putting 250,000 in the market. 250,000, I'm looking at doing anywhere from 5 to 15 positions, just in CSPs. I'm not even gonna bother with shares just yet. I need more money for shares. And in that scenario, I'm looking at saying, 20 contracts per position, right? And the way I would go in with it is say, I'll start at 2 contracts. If it goes against me, I'll buy 2 more. If it drops really hard, I'll buy 5, right? It really depends. Right? If I feel like it's going to pump hard, I'll just go in heavy, get 10, right? It just really depends. But the point is that you can scale in and get multiple contracts in multiple sessions, right, different time frames, and take in relatively the same premiums. And assume for a second I've got 20 contracts, and all of them are showing $100 gain, and we're looking at $2,000. And if that happens quickly in a day, like let's say I get 500-600 premium on a position, and tomorrow it goes up $2, I'm seeing $150 in return instantly, right? And that's the scenario here where, the more money you have, the more ability you have to compound the cash, right? And it's important to make sure that you allocate it properly, but it's also important to make sure that, I said 5 to 15 positions. Anything more than that, it's gonna be hard to really keep track, right? Um, and as I get to the point where I can go beyond 20 contracts, that's when I start doing shares. Start buying 500 shares of whatever I've got 20 contracts in, or something like that, just to maximize the profits, or sell cover calls against it if it's going against me. Like I said, I got 20 contracts and it's all going against me, and I've got um, 2,000 shares. Now I've got 20 covered calls that are going for me. All right, boom, I can hedge. I can hedge on that. That sounds like a fantastic idea, actually. I'm gonna buy, 1,000 shares. I'm gonna buy 10 contracts, or sell 10 contracts, buy 100 or 1,000 shares. Now I can go out and I got cash secure puts, and I can sell cover calls on these 1,000 shares. So no matter what happens, I'm gonna make money. It's almost like a straddle, but the opposite direction, because theta's on your side. That's not a bad strategy. I actually really like that idea, because you get into something that starts going against you, and you sell covered calls right at the same moment. Boom! Just did yourself a
Like
favor.
me and fuel cell today. F-cell,
What about it?
I had 20 of them. It like got down to a really low point, so I bought 80 more, and then I instantly sold a cover call with those and picked up $355. And
Yeah.
so now I'm just riding this thing till April, and if it does hit, then where I bought it at, my break even, my average cost is $18.83, and I sold the April $18 call. So I already picked up $355. So if it hits 18, I'll get all my money back, and I made a couple hundred or $272.
Yep. That's the way to do it. It's guaranteed profit. I mean, if you're okay with not,
Moving that money for a while.
well, the other thing is, if you have to be okay with taking a certain amount of money, right? You signed up for a certain amount of money, be okay with it. Like if you sell covered calls and then the stock price rips past that, you have to be okay with that. You have to be able to live with that, because you might have just
Yeah.
went from $150 premium profits to could have made 1,000, but because the call basically prevents you from making more than 150 bucks, that's what you got. That's happened to me before. I had 300 shares of a silver traded company. My break even was 18 bucks. Stock price was at 44. I sold cover calls on it at 46. I got $250 in premium per contract. Stock price went up to 54. So I could have made another.
$10 up, it would jump by $10.
Yeah, it went up like that, and I'm like looking at an extra, almost $2,000 that I could have collected off of 100 shares each. So
Whoa.
yeah, and it was massive, right? Think about this for a second. It was massive because my premiums were not really much, let's say 250, 650, or right? So 250, 750. So that's 750 in premium, but those 300 shares were showing way more in value on the contract, or on the just the price
Because
itself.
if it went up by $10, the stock went up from 44 to 54. That would have been a $3,000 gain over 300 shares.
Yeah. It was massive, and I'm just sitting here and looking at it like I can't do anything about it.
So,
So
can I ask you a question? If you're in the middle of a deal like that and it's not close to your time, can you give the premium back?
no, you can't. What? So in that position, if it's against me, right? I got two choices. I'm gonna try to roll that contract, or I can let them take my shares. It's really just that simple. That's the only real choices I've got. I mean, to be honest, it's better choices that
Say that again. I either gotta roll my contract or let them take my shares.
yes. So they'll take your
That's what
shares
you
at
and Sam were talking about earlier.
yeah, I mean, this is a covered call, right? I mean, you got 100
Yeah.
shares. It's going to take your shares if it goes in the money. So that's the choice here. You let it take the shares, or you roll the contract, or you close the position out and hope that you take profits if you want to keep those shares. Because you can, at expiration, you can close your position at the money or in the money just slightly and still take profits. Yeah, if
I
you're
think you guys were sharing. You guys were going back and forth with that process earlier, and I didn't want to get in the middle of it, but I didn't quite grasp that part, the rolling of it, and how you can kind of keep your opportunity with your shares if you don't want to let them go.
yeah, I mean, like I said, there's multiple ways to manage a position, right? And you know, rolling or letting them take the shares, or um, just getting out of the position with profits. You know, maybe the position's only showing. So, example, you sold a 30 strike, price went to 32, your premium was 33, so your break even's 33. So I can still sell that position, right, for 32. I can probably make, you know, theta at the end of expiration. I might, depends on implied volatility and theta decay, but it'll probably be, if the price is at 32 and my break even is 33, I'll probably see a $50 profit there, right? So you could get out of that position and keep the shares, right? If you think the shares are going to take another rip to the sky, then you've removed the covered call, right? So, you know, and rolling is basically, you know, just allowing yourself to have more time on this position. Uh, Generally want to take in credit. You know, you want to be in the position where you have additional time. That time is what pays you. And if over time it still doesn't expire where you need it to, you can again try and manage that position to be able to roll it or whatever the case.
I think this is what there was a guy he was saying, do you have a way to show us exactly when you showed it before and there was just a button that said roll it, and I was like, okay, I don't have that button on I don't know where that button is on Webull or on Robinhood.
Yeah, it doesn't exist there, unfortunately.
Yeah, that was my concern. You can only roll over in Thinkorswim. You cannot roll over in Webull. You actually have to close the position, realize the gain or loss, and then create a new position for Webull or any other account.
Or Robinhood too, Sam.
Yep. It does not let you roll over. Only Thinkorswim lets you roll over.
If I want to, yeah, this is what this is a whole nother avenue, I think, of revenue. If you guys would like do a Zoom and put the person on with their portfolio and actually show them how to do the trade real time, and I think that's just an added level of income you guys can make.
Well, it's honestly kind of hard to do that as far as do it live, because the chances of being able to pinpoint when that'll happen, especially with a roll, I mean that's kind of like a spur of the moment. Like when I roll something, I never go, I'm gonna roll XYZ at noon today. Like I just can't. Like I'm kind of beholden to the market, right? If the market's doing what I need it to do, I'll roll it. Normally, what I do if I'm considering rolling something, I'm looking for the first green day. If I got to roll down, or if I got to roll up, I'm looking for the first red day. Because you know, if it's in a trend going away from my strike that I've got to roll towards that price of the stock, then I'm looking for the day that it goes in the opposite direction of where it's headed. That's when you roll. Right? You don't want to roll on the day that it's crushing you. You're going to roll on the day that it kind of gives you a little bit of leeway, jump in then, and if it keeps going against you, at least you've increased the time frame to which you're able to get out of that short contract with profit, right? So, okay.
Yeah.
Do you have any other questions, or so?
That's it's still not crystal clear to me, so I'm letting it bump around in my noggin.
Okay. Well, I can try and confuse you a little more and tell you that you've got to, when you roll, the process of rolling is closing out the contract that you're in, basically buying to close, and then you opening the next expiration after it, preferably for credit. Honestly, I'd never recommend doing anything for a debit unless it's regular buying to open positions. So that's the process, right? It's just buying to close the position you're in, selling to open the next following month's contract. And again, the price of the stock's going to matter based off of what kind of credit you're going to be able to get. So you might have to go further out in time if you want a specific strike.
Is that called a short call?
Is that called a short call?
Well, I just did it while you were talking on Robinhood. So I chose it. I chose a buy, and then I went to the next month that was available, and then I chose a sell call, and it says total credit when you separate between the two is $1.96. I watched a video similar to on YouTube, and I was trying to figure out if that's what you mean.
No, that's like a calendar. So
this is called a calendar?
What you just described is like a calendar if it's the same strikes. What we're talking about when rolling, it's the same thing as a calendar, but you're closing one of the positions. You're not keeping both open. So I'd be closing out the short expiration and reopening a new contract in the expiration later on, like in date. So let's say 225 today. We got expiration on some contracts, and then 305 is the next expiration. You basically, when you roll, you go from today's expiration or whatever expiration you're in, and you go to the following expiration. You have to keep going further out until you are able to trade the strike that you want for credit.
Rolling is closing a current position open. Rolling. What'd you just say? Johnny said rolling is closing a current open position.
It's
simplified.
Buying to close. So think of covered calls is what you're doing. All right, you're rolling a short call is what you're considering, right? So you're going to close that covered call position, that just the option, right? And let's say it's today's expiration, the 25th. You're going to look at the next expiration, which is on the 5th, right? For that same strike, for that same ticker, just a different expiration date. And you're going to go on there and hope that that selling price of the contract on the strike that you closed out on the previous expiration is higher valued on the next expiration. Make sense? Maybe you might have to rewatch the video here a few times.
Yeah.
It's a little confusing. I mean, And that's why I like Thinkorswim too, because there's things that I've learned that when I first started using Thinkorswim, there was stuff that I had no idea how to do or what it meant. And Thinkorswim is the platform where you can, do rolls and all types of different strategies, and I can go and play with it um, on demand trading or whatever, and I can see how it works. I can fiddle with it, right? That's what taught me how to roll, is the platform giving me the ability to try it.
Yeah.
Like, I didn't ask people, I didn't look at YouTube. I went on there on demand, and I put myself in a position where I was losing on it was a credit spread, I guess, at the time, and I rolled it, or I did the roll with the platform just to see what would happen, right? So it's the beauty of Thinkorswim is the ability to practice. I mean, on demand is like you're trading live, so you can get on there and trade on Saturday if you want.
Yeah.
Historically, I think it's a fantastic. Like, I love Thinkorswim for that. I love it. I would be much further behind where I am today had I not had the ability to use Thinkorswim for a lot of things that I've tried out. I mean, lots of strategies. Like, I tried out so many different strategies, see what kind of profits are showing, and what happens with losses, and that kind of thing. I mean, it just taught me a
Yeah.
lot. It taught me the strategies that
Thinkorswim.
that are a waste of time. It taught me strategies that are worth your time. I think you were saying something else.
No, I was just saying I have Schwab, Thinkorswim, Webull, and Robinhood. I like Robinhood because you can add and take money off fast. I like Webull because it's a step up in a more developed position. When I trade on TDA, I prefer to do it on the web browser and not through Thinkorswim. And Charles Schwab, that's just for my long holds. But out of all of them, the simplest one, that one I like the most is Webull, but it's so hard to get money on there quickly.
It does take time, that's for sure.
That one takes the longest time. So I think every single platform has different things, but yeah, the paper portfolio on Thinkorswim and on Webull, I think they really help so you can practice things.
Yeah, definitely. I mean, I think mainly why the brokers do a paper trading. I mean, Webull only does shares; it doesn't do options. But I think the main reason why they do the paper trading ability is just so that you can learn the platform. It's that simple. This is an avenue, an area for you to safely learn how to utilize this platform. So when you go to live trading, you know where everything is. You know where everything you need is.
Yeah.
That's the basis of it. I mean, I think that's why Webull has it. I think TD Ameritrade, they've taken it multiple steps further and given you the ability to trade live as if it's today, anytime in history, or I don't know how far back you can go. And you can trade everything. It's freaking phenomenal. I love it. I learned how to do credit spreads, iron condors, iron butterflies, our calendars, diagonals. I learned all of that in Thinkorswim platform. So I just went on there and tinkered with it. Played around, see what it does, see what kind of profits I get. See if a particular trade. I'm just gonna look at the chart. So what I used to do is I get on demand. I'll go, 6 months back. I'll pick a day, and then I'll before I hit start, I'll look at the chart previous from that day and previous, and try to make determinations on where it might go, and then I'll put in a credit spread or iron condor or something, and see what happens. And based off of whatever happened, win, lose, break even, whatever, I could try and manage the position and do rolls, sell positions that are in the money that are still in profit, things like that. So um, hopefully that helps.
Yeah. Nothing gonna get those 10,000 hours under our wings except for doing the time. That's what
That's
I think.
right. Absolutely.
We got to do the time, and hopefully we don't burn the port on the way. But I've gained a lot of confidence over the past 2 months just being on here with you all and learning, and I really appreciate what you're doing, and I love what you're saying too. The people about retiring and putting money by and not wasting. You say a lot of good stuff, Hostile.
Thank you. I'm glad you like it.
Hostel,
I'm learning.
you previously talked about not contributing to 401k and contributing to a traditional IRA instead, and then roll that over to Roth IRA. Can you talk maybe a little more about that? Because I don't understand. Typically, everybody it says put your money into 401k, employer match, and you're losing out money. But what's the argument against it?
Argument against 401ks? Was that the question?
Yeah. No, don't put
So
it in 401k and put it in traditional IRA.
401k is, to me, snake oil. You ever heard about that whole concept of getting sold snake oil or something like that? Well, 401k is snake oil, and the reason I consider it to be snake oil is the fact that you're giving your money to someone that is managing a fund, right? And you don't know if that fund has your best interests at heart. It probably doesn't. Your company definitely doesn't. They could care less if you croak tomorrow. So, number one, your money is going to be taxed in the future after it makes all of these gains. That's problem number one. Number two, which was the gentleman that manages the account. He doesn't care about you, neither does the company that the account is in with. They don't care either. So that's the second thing. Third thing, you have to be in control of your retirement, not some dude or lady or whoever, right? You. Next thing, you are stuck with a 401k. You're stuck. You don't have choices. You don't have options. You don't have the ability to get out of the market or in the market. You're just in it with 100%, mind you, of your account. And I always say 50%, no more. Roth, or I'm sorry, 401k, it's 100% of everything you put in. It all goes into the market. Now, what happens in the market does the shitter, hits the shitter and goes bye-bye. Does a COVID, does a 2008 crisis, whatever just happened recently. People, 401ks could probably be down 5%. Who knows? The point that I'm trying to make is 401k, all of those things that are against it. The worst of it is when the market tanks, your entire account goes with it, right? Whereas, if you're trading it, number one, you're only going to be 50% in max, right? That should be the rule. And let's say you've got equal amount of 401k and Roth IRA. Let's say you get 100k in both. Well, if you're following your 50% rule and the market goes down, you had 50k in, market goes down, let's say it goes down 50%, you're at 25k. So now you're at 75,000, right? But if your 401k has 100,000 in it and it goes down 50%, now you're at 50,000, right? So if you think about this, I get, for every dollar I put in, they give me 40 cents, 50 cents. Well, is that even going to cover taxes in the future? Let's be honest. Is that going to cover taxes when you finally do withdraw it? Right? I mean, I guess it will, but not by much. Right? Because for every dollar you put in, let's say that your taxation is at 35%. Well, if they're only giving you 40 cents per dollar you put in, there goes taxes right there in what they put in. And all they're doing in 401ks is buying equities. They're buying Facebook and Microsoft. That's all they're doing. They're just buying equities. Some of them have dividends, some don't. They don't care. They just buy random shit. I looked at it in my work, and it's trash. They call themselves fund managers. They should be ashamed of themselves. But anyways, those are all the bad things about 401k, right? So it's kind of like I always refer to our 401k like a house in this sense. Every year, you put money into a 401k every month, and in 30 years, they said it'll have $500,000, right? And the amount of return that it's making at the end of that 30 years is how much you get killed for on your mortgage when you first get into one. So it's the complete opposite. What you want to happen for your 401k right now is actually happening in your mortgage right now if you have a 30-year mortgage paying the minimum balance. Right? Same concept. You just flip them around. They're both scams. They both work against you. Right? And the goal here is to create something that can grow exponentially and avoid getting killed by the government. 401k is going to get killed no matter what. Roth IRAs, they don't get taxed. You make $1 million in a Roth and you make $1 million in a 401k, you keep $1 million in the Roth, you pay taxes on the 401k. Waste of time. Even if they're giving you dollar to dollar, I still think it's a waste. I'd rather put my money towards a Roth, trade it myself, make way more percent return
So
than
can you actually roll over your
any-
401k to a traditional?
What's that?
Sorry, my internet is acting up. My question was, can you roll over your 401k to a traditional IRA?
Well, yeah, that's the process, right? I mean, let's say you quit your job, you roll over your 401k to traditional IRA. That's the process. And then the traditional IRA, you can roll over those funds into a Roth IRA, pay taxes, but not penalty, right? And if you want to go a step further and start withdrawing from the Roth, you can withdraw the money that you funded from the traditional IRA. Another beautiful backdoor to a few $1,000s in spending cash, right? It's a beautiful backdoor. I can roll my traditional IRA funds that used to be 401k into my Roth account, pay my taxes, whatever tax bracket you're in, that's what you pay. And then after that, in 5 years, if I've hit my goals, I can pull every single dollar that I contributed from my traditional IRA. You see how that works? It's
Yeah.
beautiful. It's beautiful. So if you got a traditional IRA and a Roth IRA, and you can make enough money in your traditional IRA to fund that Roth IRA, you never once have to fund it from your personal bank account. And in 5, 10, however many years, once you've hit your targets and goals on the Roth, you can start pulling out cash on that from that contributions that came from the traditional IRA. It's such a beautiful thing because, I'm sitting here thinking, I got a traditional IRA, and I'm going to fund my Roth accounts with it because I can easily make $6,000 a year on my traditional IRA. And now I'm like, all right, well, sweet. I can fund this forever until I start making more than $213,000 a year filing jointly. All right. So,
So
basically fund it for $6,000 every single year. And at some point, I'm going to be pulling it all back out. Contributions are going to get pulled back out, and I'm going to go have a fantastic time.
got it. I'll look into. So from a taxes where it's concerned, if I'm contributing to a traditional IRA, I can just mark that as a deduction on my tax return. Like as a salaried employee, I can just claim that and reduce my taxable income. Is that
Yeah.
right?
Yes.
Yeah. Okay. Okay.
Roth, you
Uh,
cannot.
Roth you cannot. Yeah, Roth is post tax. So
Health savings account, you can. Same
I
thing.
can claim HSA as well.
You got to have a high deductible health plan, but if you
Yeah,
do
I do
have,
have an HSA.
yeah,
I
if
mean,
you
I have
have,
an HSA with Bank
yeah,
of America.
if it's voluntary, as in not out of your
Yeah.
paycheck, then yeah, you claim $7,000 worth.
Is it 7,000? Oh, joint is 7,000. The
Joint is
individual
7.
is yeah,
Right.
3,500.
Right.
So
Correct.
I'm contributing some of that money to my HSA, and then that goes into the funds similar to 401k that Bank of America has. So I put some of my money in those funds.
So I would totally get behind funding the HSA, but not a 401k. The HSA acts as a 401k because at 70 or 59 and a half years old, sorry, you will be allowed to withdraw those funds like it's a 401k, but you'll also be taxed
Tax
like it's a
free.
401k. You can always use the funds on health, anything health related.
Yeah, and
for
that's going to be tax free, 35%
Right,
off.
right.
Yeah.
Yeah, it's definitely tax free because the money you're putting in there is tax deductible, and then the money that you spend out of it is tax free because it was deducted. So that's the only thing that I would recommend contributing
Double.
to every year. If you have a high deductible health plan, you contribute to a HSA, and you're basically able to keep all your money for health versus paying like a PPO plan and your money just goes down the shitter and you never get to see the light of day. Right? HSA is the
Right.
opposite. You know, if you're healthy and young, get a high deductible health plan and get a HSA and contribute to it. You know, because in I don't know 10, 20 years, you know, I mean, I max it out every year. You know, I do 7,000.
Yeah.
So, you know, in 3 to 5 years, I'll be at $30,000 or something, right? Somewhere around there, right? And 7,000,
Yeah. Yeah.
you get it. But
Yeah.
and at some point after a certain amount, you can start trading that too. I think it's after
But
$9,000 you can start trading that account as well.
no, I think in Bank of America, the minimum limit is $1,000, and over $1,000, you can put everything in the market. But in Bank of America, they have only limited amount of funds you can put your money in.
Oh, so it's like mutual funds or some stupid crap like that.
Yeah,
It's
yeah,
not
some
actually
some
managing
has
the account.
funds, yeah, yeah.
Yeah, that's
Like,
not worth it then. Just, I mean, unless you
what
can
do
do
you
like
have?
some annuities or something where they're guaranteed returns, then I'd say okay. But
Nah, it's some random funds, man. Like they're like bunch of retirement funds, Vanguard funds, Invesco
yeah,
funds, and
I
so.
don't. I mean, I've never really put a lot of time into mutual funds. I mean, I know what they are, I know what they do, I know the process, but I've never actually tried to go in and find one that's got really terrific holdings. Right? I mean, that's the problem here is you're relying on somebody else to make the decision on whether or not these holdings are worth being in the fund. Whereas I could just go out there and make my own holdings. Right? I can go out
Yep.
there and create my own mutual fund if I really wanted to. So um, yeah, health savings accounts fantastic for health benefits. Um, but you need time to build it up. You know, I'm in the position
Yeah.
where I've had to spend some of it, and you know, I'm not able to breach, you know, $6,000, $7,000. I mean, I started it, and then I had to spend money on this and that for the past, you know, 2+ years. Had to spend money on it since I started it. Now my wife wants to have another baby, so guess what? That entire account's probably going to be gone. So, you know,
But it's tax advantage, so it's double tax advantage. So I mean, it's
yes, two
basically you're
ways.
getting 35% off on your health bill,
Well,
your medical bills.
the thing is, eh, the high deductible health plan basically states that at $2,500 for a married jointly filing couple, 2,500, they start paying 80%. At 5,000, they start paying 90%. And then once you've spent out of pocket a total of $7,500, now they pay 100%.
Correct.
So that's also the really cool thing is you're not actually like if you have to spend your entire account, you're not actually going to be spending just 7,000. Like once you get to 2,500 out of pocket, then it's like, well, now you're only spending 20%, so,
Yep.
and that 20% you're spending, that's the amount that adds up to, 2,500, 5,000, 7,500. Right. So that whole time from 2,500 to 5,000, that $2,500 you spend, that's only 20% of the total bill. Right. So,
Right. And plus, you get that 35% tax advantage money on that 2,500 that you're spending if you pay from the HSA account.
yeah, I mean, and that's the thing is,
Yeah.
that's actually, it's more than 35%, because if you spend 7,000, you're at 50%.
Correct. Exactly. Yeah. The more you
Right.
spend, yeah. Yep.
So, and
You never
especially
want to
if
spend on
your
health,
account
but
is built up, you've got 20,000 in there or something, you could easily outspend the maximum required amount to be out of pocket and still have tons of money left over. Right. That's the goal, is to have $7,500 per person per year for the next 3 to 5 years. That's how much money that I'm looking to have into my HSA accounts. Right. So, that's just gotta, that's how it's gotta be, because you gotta protect your family. I got 3 people, so I need to have, basically 75,000 times 3 to completely cover my entire family for 1 year, right? And then I have to double that number to make it 2 years for everybody. I've got to triple that number to make it 3 years for everybody. And in that scenario, that means everybody needs it at the same time for the same amount, right? Don't really need to, that doesn't really have to be the case either. You could technically get away with 7,500 times 3 only, because if you got enough to cover all 3 people, I mean, not all 3 people are probably going to need it. It's probably just going to be one person. If somebody gets really sick or something, you can maximize the spending on one of those accounts, still have the $15,000 left, and now the insurance company is going to cover the bill 100% moving forward for any medical related expense at that point. So if you get sick and you've got to spend $7,500 and you've done that by April, if you have to go to the doctor or do anything else that requires you to give your medical insurance, they cover it 100% from moving forward till the following year. All right. How many people we got left in here? 20. Okay.
thanks, man. That was really helpful. Appreciate it a lot.
You're welcome. Okay. Who else has questions? Anybody?
Hostile, could I ask you something about your leaps?
Sure.
So I went in the SLV leap. Do you have like a set date or like a time frame you think you're going to stay in that for?
I will probably get out of that when I see $100 in profit.
Okay.
I expect silver to make me really irritated with gold right now, but silver is kind of holding steady. I expect to see precious metals really start running up by June.
That's like their time when they really
Yeah, that's when they start popping. Yeah.
Yeah.
So I mean, I expect my leap to still hold significant value by then. So I'm not too worried about it. But I would like to get out of it sooner rather than later. I kind of want to clean up some positions I've got. Matter of fact, Apple and CLX that I was in, I've got one contract each of those left. Apple, I only bought one. Clorox, I bought 3, and I still have one left, and it's actually down now. So I want to I got a gold leap. I've got couple other leaps that I didn't alert to anybody. I just, you know, I don't like to alert everything, right? Things that I
Mm-hmm.
think are going to make money. Obviously, I mean, I'm not going to get anything that doesn't make money, but I don't know. I don't like alerting everything. That's all.
Yeah. Are you is your portfolio, is that like mostly leaps you said?
No, I've got a margin account that I do leaps in.
Okay.
Yeah. My other accounts are like cash secured puts and shares.
Okay. Yeah, because I've been trading option, like just short-term options, and I've just been getting burned like the past like 2 months. I've lost like half of my portfolio, and I'm just like trying to figure out what's going to work for me. And I don't have all the time in the day to stare at my computer, so I'm trying to figure out what would be the best option. I think leaps are like better off, and then just trading shares.
Well, shares, leaps, and cash secured puts. You got to have the capital for the CSPs though, but
Yeah.
once you got 20 or 30 grand, you can start doing those too.
Mhm.
That's more consistent returns, but shares will pay more. Just sometimes requires more time. Um, leaps will pay pretty well too, but I think you should consider things that are 8 months out. Right. So let's say, for example, you want to get into a leap, you get something that's 8 months out, and then if in the first month it goes against you, you can roll that to the following month,
Mhm.
and it basically resets your theta. It resets your entry price based off of whatever strike you got into. So there's that, right? That makes a difference on when did you enter that price or enter that stock, because if the price was, higher than it is today, then that just it's relative to contract value basically. Um,
Yep.
so yeah, that answer
And
your question?
rolling it, yeah, rolling it is just, that's basically just adding more time. But do you like put in more money when you're rolling a contract?
Yeah, when you're doing leaps, you have to debit more. Um, so there's a little planning that goes into leaps, in my opinion, and you basically need to know what's the contract worth that you're trying to buy today. Look at the following few months of expiration. So let's say, for example, right now you got a July. Let's just assume that for a second, or August. Then there's a
Mhm.
September, October, and a December, or and a January. So you got like maybe 4 option months you could potentially roll to. Then you look at each strike, where your current strike is, and you got to determine, all right, um, number one, am I willing to pay this much more for the total of the contract? So if you get the July and it costs you 500, but the January 2022 costs you 1,200, well, you're gonna probably have to be debited for that amount. Um, the beauty is that when the stock price goes against you, when you want to roll this particular type of option strategy, um, you got to wait for the stock to drop. When it drops, you're basically averaging down and
Mhm.
rolling out, right?
Okay.
Because you're
Yep.
re-entering at a different price level, and that's relative to the strike price that you're in, right? So
Okay.
you basically reset that, and you reset your theta decay. You add,
Which is
and
great.
like you
Yeah,
said, you
yeah.
add more time, right? So the more time you add, like these positions now, like let's say you've got a leap this in January, it might be $1 to $5 of theta, and a position might have cost you 1,800 bucks. $5 of theta for the next 3 months is probably gonna not really bother you at all, right? And then if that thing pumps in the direction you need it to, you'll see profits. It's like
Yep.
holding shares almost.
Yeah. And most of your leaps are calls, right? You're not really shorting anything.
Yeah, no, I mean, no, I don't. So I want you to understand something that you just said, shorting. You're not
Yep.
shorting something if you're betting that it goes down, right? You're not technically not shorting it. Shorting it means you're borrowing against it, and you're not borrowing when you're buying puts.
Okay. Okay.
But you're going short on the direction. You could probably say that's probably a better way to describe that. Um, yeah, so I don't do put leaps.
Yep.
I'm bullish in the market in general, so I like to just do leaps in one direction because I'm bullish that way. So long term, it's going up. Um, if you get it off of support, I mean, it's bound to produce
Exactly.
profits. Yeah,
Yeah.
so I mean, you just got to take them when you see them. I mean, I'm even like I said, I had 3 Clorox contracts. I sold 2 at 350, and then the last one I was thinking, you know what, I'd like to see this go to 600, and now I'm down to like 150 loss on that.
Mhm.
So even I'm guilty of not taking profits when I see them. So I've started a new thing for myself where when I see a certain amount of profits in a certain amount of time, percentage wise, I'm taking it no matter what. So the sooner
Yeah,
you take
that's
stuff off the table, the sooner you get to that promised land that you promised yourself.
exactly. And so my account isn't very big right now. Like I don't have much capital. So I mean most leaps are at least $400 or $500. And you think like that's a pretty good way to, I mean, start building it off, like just trying to find support levels and getting
Much
bounces. It might,
safer.
yeah,
Much
yeah, I like
safer.
that better. Hmm.
I mean, it's going to require more capital. Don't doubt that. But
Yeah,
it's much safer. I mean, because something goes against you, you still have time. It's not going to hurt you to have to see this thing go sideways or down for a month. If it takes two
yeah,
months, if you're in a year leap and it takes 2 or 3 months to come back, you still should see profits. I don't doubt that for
hmm
1 second. But if you've got a 6 month leap and it's been down for 3 months, might be time to roll, right?
yeah,
And even then, you got to kind of reconsider whether or not that position is going to come back up where you need it to before you even roll it. So
yeah. After, if you have like a year leap, so after around like 6 months is probably a time when you have to either cut it or roll it.
right, yeah, you
Okay.
don't want to keep holding it. Yeah,
And
absolutely.
that's with pretty much every option contract.
Yeah, rolling doesn't work as well for shorter term stuff though. Only leaps I'm interested in rolling, but
Okay.
anything shorter, I don't mess with that.
And I
On
mean
the topic of
now, like, I mean, for example, PLTR, like I have it at like a support level, like, at like, I have a pretty big level at like 23.5, and it's at that, and I don't really know exactly where it's going, but it's pretty low. I think undervalued right now. So you think now would be a good time to buy a leap for that?
Um, so another thing you got to keep into or take into consideration is implied volatility if it's high or low. Right now,
Mhm.
PLTR has high IV,
Yeah.
so you don't want to buy options with high IV. Right, you got to
Okay.
be an option seller of those types of things. Now, maybe you don't know how to option sell, then shares is going to be the best bet here, right?
Mhm.
So
Yeah.
take that into consideration. Don't buy options with high implied volatility. You're paying too much.
Yeah. There's a lot of stocks that have crazy IV right now just because of everything, right?
Yeah, don't pay too high for something, and then because even if the stock price goes up and IV drops, you still lose. You still lose.
You're not even gaining. Yeah, exactly. I didn't take that in consideration. Thank you so much.
Yeah, no problem.
on the topic of leaps, Hostel, Telio is in 20, 30s, and 50s, 2023 leaps. On the trade floor, he mentioned that for PLTR, this is on trade floor, he mentioned that his strategy is to get the leaps, pay for the shares, and get the shares for free upon expiration. I didn't quite understand what he means and what that means. Could you touch upon that a little bit if you know?
You got a screenshot of what he said?
No, but maybe let me look it up. on the trade floor. I think it was just a couple of days ago.
Okay, while he looks for that, anybody else have any questions?
I was trying to on the voice chat the other day, I was saying how I preferred to buy calls that were in the money. And one of the gentlemen said that can burn you either way. And then when you just shared, try not to buy with high IV, because even if the stock goes your direction, you could still lose because the house is, I guess, taking off a lot off the table. I'm trying to really put both of those concepts together so that I can really understand it.
Well, what I was talking about before, as far as resetting the price, resetting theta, entry price, regardless of what strike you choose, entry price makes a big difference because that's the starting point or your bearing of entry. So if you get something in the money and the stock price is obviously higher than the strike, if it goes lower, it's probably going to burn faster and hurt worse because it's coming towards you. And when you're at the money, that's the biggest change in the Greeks is when you're at the money, right? So if you're buying calls in the money, I think the main general strategy is that you want to own it at that strike price. You want 100 shares of it. And I just think that strategy is kind of pointless because I could turn around and do CSPs and do the exact, accomplish nearly the exact same thing. There are strategies, however, that buying in the money calls does work, and diagonals are an example. Buy in the money call, sell out of the money call against that in the money call. One's got a shorter expiration than the other. The bought position basically has like I was doing leap diagonals and leap calendars. You buy a leap out, and then you've got a short-term call that you're selling against that one that you purchased. Is basically a poor man's covered call, and this is one strategy, the diagonal where you can do in the money. There are other strategies, but I don't really do those, so I'm not going to talk about them. But in the money is, I think it's specific to something versus just buying calls in the money, because the idea behind that is that it expires above your strike price, and now you can exercise it for the strike price that you bought it at and sell it on the market as shares for that premium. So beyond that, just buying a naked call in the money, I can't think of any reason why that would be a great idea. Like I said, because I could do the same thing with a CSP if I really want to own it. I can get it for discount too if it goes against me. And if it goes against you with a naked call, you just lose. So does that help?
A little bit.
Okay.
I think I'm very kinesthetic and visual learner. So a lot of times
I got you.
when I'm just hearing the words or if I'm just reading it in a book, it just takes me a little bit longer, but I just got to keep at it. It'll click.
Yeah, definitely keep at it. I mean, I get what you're saying. I'm more of the same, right? That's why I was talking about on demand for
Yeah, you
TOS.
touching the buttons, that
Yeah,
really was what helped you.
yeah. So I mean,
Yeah, that's how I am.
I can't stress enough how amazing it is. You should definitely get in there and
Play
play
with it
with it.
more.
Yeah.
Yeah, I think I'll go on there, like you said, and go on TOS. I have it all set up, and I have the app on my laptop and my phone, and I can just set the paper money up and get used to where everything is, and set up my charts and get it to where it shows multiple charts. And we have some really good people in the Discord. One of them actually volunteered and got on with me on Sunday, and we were setting up some stuff on my computer. So
Yeah,
I
I
think it's
mean,
gonna
you know,
be.
that's learn strategies that, like, you know, when you like on Thinkorswim, if I right click on the option chain, so I'm gonna do that real quick. If I right click on one of these strikes and I do a buy or a sell, there's what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So let's just say 16 different strategies that you could go on demand and just trade it. Look and see what it does. I mean, the analyze tab is absolutely important. If you can learn how to use that, you will be in such great shape.
Analyze. Okay, I see it.
That one will actually show you profit areas, loss areas, theta, time loss, like the theta, but you can go in dates, so you can go forward in days towards your expiration and see what happens to theta and see how the position shrinks or grows or whatever the case. Um, really, really fantastic tool. Analyze tab and on demand. One of my top two favorite things about Thinkorswim.
Hostel, I posted what Telius told on the chat, on the Zoom chat. If you can read it and help understand what he means. How is he getting the shares for free?
Where did you post that?
Zoom chat.
Oh, Zoom chat. Oh, okay. Shit. I gotta find the chat first. Give me a second.
Oh, I can DM you on. Okay.
How many screens you working with, Hostile?
I've got three. One is a 34-inch widescreen, and the other two are 25-inch widescreens.
Nice. Did you work a full day today?
Like my regular job,
Yeah,
I work Sunday to Wednesday,
you hardworking man.
and it's a lot. Sometimes I don't even know how I wake up at 9 a.m. or go to bed. Sam, I'm not really sure what he means in this. There's a lot of
Okay.
different back and forth. You might want to ask him on that one.
Yeah, I didn't quite understand either. How could you buy shares?
But
With
there's context that we're missing, so you got to figure out what that is. But I would ask him directly.
okay.
Maybe put it in the question bot.
Okay.
Yeah, I work Sunday to Wednesday. I try to go to the gym 3 times a week. I got a 5-year-old, almost 5 in July, and my wife obviously I have to pay attention to her. I take geology right now. I'm trying to get my associates. And then, whatever free time I've got in between all that is, spent on Discord. I get tons of questions every day. I wake up and my phone's got 8 to 15 missed messages
Yep,
on
I
average.
could believe it.
So I mean, I'll be honest. I spend probably more time on Discord than I do at my regular job. If you
You
can
got
believe
the
that.
regular job on the system, so basically you probably got everything set for delegation and processes, and you just got to monitor the high level parts, right?
Right, right, yeah. I mean,
That's how my life is.
I'm in operations, so I manage in IT. I manage storage arrays, infrastructure, enterprise storage arrays. So it's kind of like ticketing work. There's some ticketing, there's incident work, there's emails, and but it's like you said, there's a lot of monitoring that happens, and um, as long as I monitor everything properly and get my work done in a timely fashion, and my manager's not breathing down my neck, she's not micromanaging me, so it's cake. And I work from home, and it's 410s, and it's second shift. So I mean, those are all bonuses for me. Like I've always loved second shift. Hate waking up at 8 a.m. or 7 a.m. driving through an hour's worth of traffic to get to my job. Um, Now, I mean, I work second shift, start at 1:30. I don't have to go anywhere. We get a team meeting every day at 2 p.m. that lasts 30 minutes, and then after that, I'm, just like you said, monitor stuff, kick your feet up, do a couple of tickets, do some um, preventative work. There's project work out there. Like I got to work with automation folks to streamline some of our business efficiency processes and stuff like that.
Yep.
But I can split up the time. Right? I can sit
Mhm.
here in front of my computer, and I've got a laptop with docking station for work, and I've got my personal machine for personal stuff. And typically, if there's not a lot going on with work, then I'm just using my laptop, and then I use my 3 screens for my personal machine. But if I've got work, where I need more than one screen, I'll make the 2 monitors on my desktop show the work. And I can configure them to do that with flip of a switch or a button or something. So spend all the time on front of this computer. That's why I have to go to the gym because my back is killing me. Just sit in front of the computer for 5 years and stop going to the gym, stop being active. It's a bad
Just
situation.
get a standing desk, man. I did that about 7 months, 8 months ago,
I got
and my back
one.
pain is
It
gone.
doesn't really do much. You don't
It doesn't.
exercise. You don't. If you
Yeah,
don't exercise, man, you don't eat good. Don't exercise.
yeah,
Don't
yeah,
get
yeah.
muscle
Yep, yep,
building, and you're gonna experience some trouble, no
yep.
matter what.
I realized it the hard way. My back pain started. I was standing desk that helped and started working out, eating healthy. Now my back pain is completely gone. I had
Yeah,
horrible
I had
back.
to go to the gym and rebuild muscle. Like I wasn't fat. I used to be athletic, younger. I used to play sports. Used to be in martial arts. Used to just do all kinds of stuff. And since my wife got pregnant, had a baby, 5 years of that, I've kind of fallen off by the wayside. Had dad bod, nice little gut. So it's time for that to go. And it doesn't help sitting in front of the computer for 5 years in one position. You know what I mean? Yeah, I got to stand at desk, but really doesn't alleviate the problem,
Yeah.
unfortunately. So I had to
Isn't it?
isn't it what?
I was gonna ask. It was a question about TradingView. If anybody had the premium, I'm trying to figure out how to get multiple charts on one screen.
Yeah, I couldn't answer that.
Yeah, I'm trying to look on the internet now.
As support, there's a couple of people in support that use it. I think Mario actually uses it. Um, VCAV probably uses it. Professor, or I think his name's AR or Assassin AR-15 now. He uses it. So maybe they could provide some insight.
Just kind of drop it in
You
the
can just add the question bot, and anybody in support's gonna take a look at that.
questions and responses,
That's
or
where
just
the
go
answer.
anywhere and add it.
You can add the question bot on the trade floor, It'll put it in the question channel, and when somebody responds to it, it's going to come back to that questions and responses channel.
All right.
The bot's going to alert you and say, "Hey, you got a message," type of thing. And if nobody responds in a day or so, let me know.
Yeah, I was looking on YouTube and whatnot because I also want to put the volume on the side of the chart on the far axis on the far right.
Right.
So I have so many. I'm trying to pick which indicators I understand and put those at the bottom. And I saw I was watching Twitch and watching Stock Daddy, and I noticed that he had something similar that I follow. I see crypto traders, and the volume is on the side of it, so it's not all fleshing up from the bottom of the screen,
Right.
which sometimes is not good for my eyes. So it's just kind of like some setup stuff, like admin type things that I
Right.
need to put the time in, the handhold, like you said on Sunday, just or Saturday and Sunday, just really sit down and prep everything and have it set so that it saves. That's why I went ahead and invested in the TradingView Premium. It was like
Yeah, I mean,
50% off. So I was like, all right, let me just get everything so that I can grow into it.
the thing that about TradingView is they have these things where people can create scripts or indicator scripts that are kind of like a trade all type of indicator, and it may work for some people, it may not. But the bottom line is what you can do in TradingView, you can do in Thinkorswim. So once you get comfortable, Thinkorswim does everything that does for free, and I can put my volume indicator on the side in Thinkorswim, just like you're talking about. There's so many more capabilities. I feel like no one compares. I'm not trying to say that TradingView is bad. It's not. I think it's pretty good. I just feel like if I have to pay for something I can get it somewhere else for free, I kind of that's a red flag for me. Um, I'm sure there's benefits there though. So, but consider that once you get great
Yeah.
at reading charts and all that, consider just switching over to Thinkorswim. I mean, it's got
Yeah, I have
scanners.
it. I have Thinkorswim. it's
Well, I mean,
it's not as
from
user
using,
friendly.
yeah,
Yeah, I have about 7 or 8 positions inside of it. I threw a few grand over there and so that I can get used to buying and selling. Um,
yeah. What I meant was over time, um,
ow.
you can stop paying for TradingView and just do it on Thinkorswim because it's
Yeah, I just pay for 1 year. Like I have a 1 year Discord. I got 1 year and 3 month Discord membership, and then I just got 1 year of this premium. And I was like, just get used
yeah.
to the
Try it out.
different platforms and figure out what works. And I just keep asking questions and being willing to look like the new kid so that I can really try to maximize this. Like I really think I can get a grasp of this hostile. I'm pretty excited about the opportunity for my
Yeah, I mean,
family.
that's the really great thing, like that you say that because like I go downstairs every day when I see my wife and I'm like, we're gonna be millionaires. It's not a matter of if, it's a matter of when. When am I gonna be a millionaire? Is it gonna be 5 years? Is it gonna be 10 years? But it's gonna
I
happen.
want to be liquid. That's me. It's like, you know what? It's not like you always say, it's not hard to get to $1 million. That's what people, I think once you get to the first one, then it's time to get to the second one, the third. But it's like really working smarter and not harder. And, I've been blessed and very successful in my business to where I can do this and I'm still under 40. And, but, you know, this is how you create leverage and other leverage other than, talent. You got to leverage more than other people's time. I think if you really want to exponentially grow, and I think we're in a really good time with the changing of how we're doing a lot of things on the earth with the banking changing and the money changing and this different sectors are, it's like a big flip right now, and this is a chance for us to really, become tens of millionaires if we want.
Right. Yeah, I mean, I always said it to my wife that, I made 105% return on my account last year in 8 months. If I can do that in 12 months this year and do that for the next 5 years, I will be a millionaire in 5 years.
Yeah. Oh yeah, you
Right.
will.
And the
You
thing is,
definitely will.
it's like I can't tell myself that it's not possible because I've already done it. Right. So now I know it can be done. Now it's a matter of just doing it again and again and again and
That's
again
it.
forever.
That's right.
Life is going to be so amazing when I don't have to work and I don't have to wake up at a certain time. And I was even telling my wife this morning, I'm so sick of going to the gym. I can't stand having to wait for a machine. It irritates me. Like I'll try to go early, like I've been early and it's slamming in there. I'm like, this is retarded. I woke up early to come to the gym to try and beat the crowd and it's already here. Shit irritates me. So I was talking to my wife. I can't wait to have the money that I'm trying to have because I'm gonna build my own gym. I'm gonna have my own equipment, and I'm gonna wake up whenever I want, and I'm gonna walk my ass to my gym, and I'm gonna go in there and I'm gonna work out.
And your trainer's gonna show up on a digital screen, or they're gonna walk in there and stretch you and do all those other cool
Right,
things.
right. I mean, at that point, it's like, you know, I'm doing the things I want to do, and I'm gonna spend the money on the things that are gonna help me uh, survive longer and be in a better position to, you know what I mean? Like, the
So
gym is just
there's
such a,
this
oh,
there's this new well, it's not new technology, but it's the way our body works. It's called NAD plus. So today, I was in a trade recommended to me, CDXC, and I wrote it up. I bought a $12.50 call for like March 19th, and I wrote it up. It went all the way to 24. I cashed out right around 20, so I made uh I'm gonna say on the low end $400 to $500. On the high end I could have probably cashed out around 700, but didn't have a stop loss and rookie stuff. But anyhow, I was sitting tonight going, man, I should really look into that company and see what's going on. And it happens to be this NAD plus technology that I've been looking at. The IV place that I go to a couple times a month to get my vitamins. They have the NAD infusion drip where you can get on it for 8 hours and basically turn over your cells. So it just so happens that this company today, the one that just got a tip, hey, check this out. I looked at it, I jumped in, I wrote it up, I made some money. And now there's something inside of this company that helps me with my health. I think that trading stocks, it helps you educate yourself, learn more about the world. It opens up your horizons. It makes you look past your day-to-day life. There's a lot of other benefits to it. And so when you say about working out and getting healthy, that was the first thing I thought about. I was like, yeah, today I got reinvigorated to go ahead and sign up for my NAD plus infusions. And that was just because I've fallen in love with trading, and it's just like all connecting the dots. So when you're telling your wife all the outcomes that can come from having access to money and time freedom, all of that is possible for you, Hostile. And I really hope you get it, and I know you will because you're willing to put in the work. You're willing to be on here at midnight sharing yourself with us. That's the best way I think to get what you want. Napoleon Hill says it. If you think about giving more value into the world, you'll never have to worry about money. And that's
right.
one of the things I always believed in. If I'm just bringing more value than I'm taking, I'll never have to worry about money. And it's worked out pretty well.
Yeah, I mean, that's kind of why I do my lectures, right? And a lot of these other guys, they'll do lectures till, from 8 to 10 or 8 to 11 or 9 to 11. I mean, I'll go to 5 a.m. sometimes. I mean, it doesn't bother me really. And the reason I do it is because it's kind of that same concept of what you're talking about, where, if I'm giving something back, my time to people to help them get them in a better position for their lives, the money will come because, there's so many benefits to it. I mean, like me going through these Q&As, every week for the past, 6 months or something, twice a week. It's like I'm learning, right? I'm learning. I'm getting better at what it is that I do because I've explained it a million times. But at the same time, I'm giving out my time to teach people to give them, it's like, the universe has good energy and bad energy, and if you're producing good energy, then you're only going to get good energy back.
That's
So,
right.
you know, it's really nice to be in the position to help people, um, because I know ultimately, I'm teaching the same thing, and I know where it's going to get me. And if I get people to take my advice, they're going to at least get to where I get, right? And the more successful I am, the more I can prove it to people that they can do the same thing. And it doesn't, you don't have to go to school and have a master's degree to do it. It's just a matter of putting your time into it and deciding that this is what you want to do, this is what you like to do, this is what's going to sustain your lifestyle and grow it here on out. Not many things in the world you can say that will do that. Not many things in the world where you can, um, be your own boss and not have to answer to customers. There's a lot of entrepreneurs out there, a lot of people with small businesses, and they got customers, right?
I get
This
4,000 customers a year, and I tell everybody thinks that I'm the boss, and I say I'm not a boss. I'm a steward. I'm
Right.
a steward over the opportunity. I'm just here to make sure that all the promises get made to all the people who work here, and all the promises get made to all the people who come here as the customers. But I have 4,000 bosses every year, and they come in, and if they don't like it, they vote with their feet and they go down the road. And it's vulnerable when you have leveraged people who may be showing up at work resentful, saying I don't want to work, and then they could break your business.
Right.
And so
Yeah, there's
yeah,
a lot of
this type of
liability.
leverage, yeah, this leverage is better. I promise you. This is why I'm focused on it. This is why I went ahead and threw 30K, 35, like I'm like, all right, let's go learn. Let's go out here and figure this thing out because it's possible.
Yeah, there's no bosses, there's no employees, there's no red tape, there's no other, like if you're, let's assume that you were doing a food business, then there's no inspectors, there's no food, uh, what do you call it, chain of custody or whatever that concept is.
Yeah.
Yeah, there's none of that. It's
Nope.
matter of fact, you're not even working. You're telling your money to go work.
That's it. You
Go do
studying and
this.
learning more.
Right. Go make me some money.
That's it. Go out
That's
there and
what I'm
make some
trying to do.
babies. Tell it, go
Right.
out there and make some babies and come on back here. I got you.
Make hundreds of babies
That's
today.
right. That's right. This is why I like coming on here when you talk at night. I said Telio talks that real stuff, man. I was like, he's not on there playing no games. He's gonna tell you exactly how he feels, give you some game, and challenge you.
Well, that's what it's about, right? Challenge. I mean, if you're not challenged, then you lose interest, I think. Um, so it is important to have the challenge, but um, you know, you're in the position to better yourself just like everybody else here on the server, and that's all it takes, right? It's all you need, and you're in the right place. You're doing the right things. You're gonna get it too, right? I mean, it took me a
That's right.
while to get it, but you know, I'm after I figured it out, I still make mistakes. Still trying to learn new things to um, make more money, right? New ways to approach certain types of trading. Um, never ends. Like my screen name, well, underneath my screen name, it says never ending research. And there's a reason for
Yep.
that. There is a major reason for that. And unfortunately, it's not just with stocks.
No life.
Yeah. I mean, I find myself YouTubing things around the house. How do I do this? How do I do that? I'm not going to call somebody in here to fix something that costs $200 when I can do it myself for 5. Never ending research.
We're all growing and learning. If you stop growing and learning, that means you're reversing, and that's not the way you want to go.
Well, that's not how you were created. You're created to continue to gain wisdom and knowledge throughout your life. And if you don't do that, you're not doing any yourself any good, right? I mean, I try to tell this to my brother because he just kind of, what do you call it, hovers in life. He doesn't really try to go further or be better today than you were yesterday type of thing.
Mm-hmm.
He's content with where he's at, and that's fine. There's people out there that prefer to be that way in life, and that's cool. I got no problem with it. But it's hard to sit by and let people throw away the most beautiful thing that we have, which is our brains. There's a reason why we're on top of the food chain of this planet, because of those brains.
Mm-hmm.
So it's too bad when people, some people decide to just not continue. I'm every day I sit here and I'm like constantly, my brain is constantly spinning. Like I got this island in my kitchen. It's like a pretty big island. It's like I don't know, 12 feet across, and I do circles around this island daily because my brain is constantly like, what can I do? I'm constantly asking myself questions, constantly trying to come up with new ways to do things, constantly trying to improve and be more efficient with what it is that I do. Stuff like that. Ways to like ways to cut costs. Ways to example. I bought a Berkey built filter, which is like a water purification thing, and I had been looking for a while for a water purification system that filters out fluoride, arsenic, a bunch of stuff. This thing actually filters out all that. Plus, I can go to a pond, get pond water, and it'll filter it into clean drinking water, which is pretty awesome. But anyhow,
that is awesome.
yeah, this thing is pretty badass. So what I realized was every month I'm spending about $30 on bottled water, right? And every month, every day, my wife washes my child, like she cleans her butt from sleeping in diapers, cleans her butt, and then we're potty training right now, so if she poops on herself or whatever, then you come back up here and clean her again. She takes a shower, I take a shower, and one day, let's just assume for a second that's what I do every day, one day or per day. That water that we use to warm or to to bathe in, prior to getting into it, we let it run. It's cold, we let it run, it gets warm, then we get in, right? That cold water, I collect it, right? And I got these things called water bricks. I can hold 3.5 gallons per brick. I've got 10. So I got 35 gallons of water storage just like that. And I fill them up with these buckets of water that we collect prior to getting into the shower. And I've basically just reduced my monthly cost of that water bill by $30. And the Berkey system cost me, how much did it cost me? $250, right? So 30 divided by 250, that's when it's paid off. Right? And I got filters. Filters are about $80, I think. Well, no, they're like 115. But they'll do 3,000 gallons of water per filter. If you get 2 filters, now it's 6,000 gallons of water. So this is one way. I constantly sitting here like going around in circles and circles and circles downstairs, thinking, how can I maximize the water efficiency, minimize the expenditure, and maximize the ability for me to better my position as far as finance. Right? Little things like that make a huge difference in the long run. And a lot of people don't realize that, if you spend $5 on this, $10 on that every month, 5 here, 10 here, 30 there, You know,
We call it death by 1,000 cuts.
right? And you know,
You bleed out slow.
if you're constantly spending money on these little things when you could be cutting them back, that just
Mhm.
honestly that takes away from like if I want to put money in my brokerage account, right?
Yeah. It's your
So
Starbucks money, your smoothies money, your
right,
cigarettes money, your candy money, your bubble gum money. I tell people all the time, it's one of the reasons why poor people stay poor, is because they don't mind bleeding out little by little by little. And wealthy people will skip the little things and then make the money all that little money. It'll add up and they'll make money off of that. And then they'll be able to buy a big thing for free because
right,
they made it off of the proceeds. That's the thing that poor people haven't seemed to click. They think because it's $1 or $2, it's not a big deal. It's the habit, it's the behavior that keeps poor people poor. And I
yeah,
come from Section 8. I come from all of that. So I know what it's like to be poor. I just made a decision when I was very young that I was not going to be poor and work really hard. And so um and I'll stay focused on it. And so that's the deal. Stop wasting small amounts of money. Like when you were saying, don't ever take a loss. Like that was something when you're in the portfolio and you're looking like, man, I could just sell this and lose this money. Figure out another strategy. Try to be creative to come up with another strategy so you don't have to lose money. You may have to put a little more in to make the deal work, but at least you didn't lose money.
right, right.
I thought that was a really good point you made earlier.
And if you've got a lot of money, then having to hold a position or throw more at it, it's not going to kill you, right? So
No.
that's the beauty is, I mean, you know, that whole thing about, people buying all this little crap and spending money and not really paying attention, it's a mentality thing. It's a
Mm-hmm.
cultural mentality thing. And
Behavior.
yeah, and it's American culture. Most people have been conditioned. Like a lot of people don't even realize that it's a subliminal thing, and you've been
Mm-hmm.
conditioned to want this and want that and eat this and eat that, right?
They 99 cents you to the poor house.
Right, exactly. That's exactly what
99
they want.
cent, 99 cent. You're 99 cent $1 million before you know it.
Right, and your health went 99 cent with it. So
Yep. You the bargain, you got the bargain body, the bargain brain, and the bargain bank account.
that's right. I was telling my wife the other day, I'm like, I'm tired of seeing ordinary people and I'm tired of being ordinary. And she's like, well, why don't you be extraordinary? And I'm like, I am being extraordinary by doing my stocks, right? It's someday in the future, I'm going to be not extraordinary, but extraordinary because
Mm-hmm.
I consider people that go from nothing to something, go from, walking to flying in private jets to be extraordinary. And that's where I'm going to be from. Like, I mean, I didn't grow up poor. Like you said, you came from Section 8. I didn't grow up in that neighborhood. I actually grew up pretty well. Like my family made money. My mom was a hematologist. My dad was a manager at an energy company, and they made good money. But they didn't manage it well, number one. Number two, they made all the mistakes of my brother. So when it was time for me to have the same things, I got told no. Right. So me growing up, my family had money. We always had, food, but I never got anything I wanted. My parents never gave me anything. They never gave me money. Um, when we would eat, my mom, she is a Filipino. She was born in the Philippines. She was the oldest of 15. Her parents told her that you are in charge of your siblings to make sure that everybody eats. My mom, for her entire life, has had to ration. And so I grew up with my mom rationing between me and my brother and my dad. So we rationed, even though we had money, we rationed.
Yeah,
So,
it was her survival thing. Yeah.
right, yeah, she just it's conditioned,
Mm-hmm.
culturally conditioned to her. And, you know, family of 15, yeah, I get it. But a family of 4, let's be honest with ourselves, we didn't have to ration. But either way, I didn't get nothing. Like, I'm like, My mom would, when I'd go to elementary school, middle school, high school, I would have just enough money to eat the trashy lunch that the school offers with that hard plastic tray. Um, I'd have to eat that. And once I got to high school, actually middle school, they were selling pizza like Domino's. Uh, they kind of just started at like seventh, eighth grade. They started pizza, and I'm in here in middle school with I think like $1, $1.15 is what the lunch cost,
Mm-hmm.
and the pizza was $1.50. So I'd have to sacrifice one day and eat a slice of pizza and a soda drink the next day, right? Just one slice. So I was so tired. Like my parents never gave me any money. I was so hungry all the time. All the time I was hungry. You know, I, I was to the point where I was like, I think I was 13. I went to my cousin's in Ontario, Canada. Went to a pizza joint. Pizza was my favorite food. Sat down at the table. We ordered our pizza, and this family that was sitting behind us had abruptly left. Just got up and left. They had some kind of emergency or something. Because I remember hearing them talk about, oh my God, the door, this and that. So they got up and just left. Pizza sitting right there. I went to that table and started eating on that pizza. I was so hungry, so young, so hungry, always hungry. My aunt was like, oh my God, what are you doing? Like she was
Damn.
like, she looked
Yeah,
at me
probably
like,
blown away. Like, what is going on?
yeah. And I was just like, I'm hungry. Like I'm always hungry. I get the opportunity to eat something, I'm going to eat it. Right. So by the time, um, I guess it was like kind of late eighth grade, middle eighth grade. I asked my mom, let me, buy me, I'll pay you back, buy me a box of blow pops and a thing of Winter Fresh and a thing of Big Red, like little packets, or there's like 10 of them.
Mm-hmm.
And I went
Make
to
that
school and I
money.
started flipping those for a quarter.
That's
Next
right.
thing you know, I'm eating whole large pizzas and 2-liter drinks if I wanted it.
That's right. That's right.
And that's where I started. Like I started
Heck
out
yeah.
like I'm so tired. I'm so freaking tired of being hungry. I'm gonna get a job and I'm gonna make money so I can eat.
That's it.
That's what I had on my mind. I didn't care
Flipping
about.
quarters before class, before school, taking people's money so that when it was lunchtime, I could have a flavored sparkling drink or a
Right.
creamsicle popsicle. Yeah,
And
it's
it
what
sucks
it's that
when,
things that people don't understand what's inside of some of us.
yeah, and it's like, I was always like seeing people eating French fries and seeing people eat tacos, and I'm in the cafeteria with this damn peanut butter jelly sandwich, and I gotta drink fountain water, you know. And it sucks because my parents, my family, we weren't poor, right? We just lived like it. I feel like we lived like it. I always got hand me downs. I always got, we always had just enough food for today. Um, Never got to go really anywhere. Um, I used to go to the pool during summer school, but I can only get in the pool when my neighbor across the street would go because he was allowed a guest. My mom wouldn't let me get pool access. So she's always counting dollars and pennies, right? So that's what got me to where I'm at. Like, never again will I be hungry. If I've got the damn, I'll do whatever I have to do to eat, right? I've even got to the point now where I'm like, when I finally get the home and house that I want, I'm gonna grow my own food so that if shit does hit the fan, I can still eat. Right? I'm not trying to kill people for food, and
That's it.
and create, like I was talking about, efficiency and trying to think of things that I can do to produce value in life, and take away from things that are taking from me, or at least get away from them. Like, here's an example: the power company always going to charge me. The argument of solar panels is great in the sense that in 10, 20, 15, however many years it takes for them to pay off, you're going to have paid that money to the power company anyways, right?
Mm-hmm.
But started trying to think, like, this is what got my brain thinking: is what else can I do to generate power besides solar power? I can do wind power, yeah, but that's not really going to do much. Um, what else can I do? Well, water makes power. Water generates power. You got these dams that create megawatts of power. So I started, doing some research and looking into how can I create power with water in my backyard. There's a video of a guy that has this little turbine that he made out of a power steering, or it's an alternator with a computer fan, and he puts it in this pipe, and he sucks water in this pipe, and then it starts flowing outside of the other side of the pipe, and he's producing 500 watts a second, which is, or no, I'm sorry, it's 500 watts an hour, which is half a kilowatt an hour. So he could run that for 24 hours a day, half a kilowatt an hour, right? So what's that, 12 kilowatts a day continuously, right? And I could do that. Like solar panels won't do that for you.
Really?
Unless it's a decent amount of them. Like you gotta have like a couple of arrays, right? A $20,000 solar panel system here where I live is around 7 kilowatts of usage per day. Like it'll produce that much in the 5 to 6 hours of sun that you get in the summer. Right, but I can take this water wheel and buy like 10,000 gallon tanks and put these pipes inside. It's think of like the letter N, a lowercase letter N. Well, maybe that's not what I want to do either. Like think of an egg. You cut an egg in half and you take the top half, and then there's like, put a pipe in place of the round structure of the egg, right? So you've got a down pipe, a 90. It goes straight a little bit, and then another 90 down, right? So you're basically, what I've created, and I've actually drawn up the blueprints for all this. I just need to actually test it, right? I believe this is the scenario that gets all of us off of power for $5,000 to $8,000, right? So this little power generator, I recirculate water. The water runs through the power generator, creates half a kilowatt a day. For every one of these water containers, I can put 4, right? So that's 4 times 12, right? So 4 times 12 is 48 kilowatts a day. Most houses use anywhere from 30 to 45 kilowatts per day. So that alone should cover the cost. And mind you, this isn't 5 to 6 hours of sun. This is 24 hours of continuous electricity production. All right, so really fantastic idea. Recirculating the water with a turbine that creates electricity wired into your home, and the water, and it all kind of feeds to itself, right? You got rainwater, so it rains, collects, hits your roof, runs into this water container that we're using to produce power, right? And then that water will go into the house, filter the house, flush my toilets with it, and then I use my little Berkey to get the water out of the system and purify it further. So, there's so many things you could do, and like I said, it would only cost $5,000 to $8,000, and once I test it, it might not even cost that much. They have this cool little turbine that you can buy. It costs $2,500. And that's baked into the price of $5,000 to $8,000. If you use like a alternator and do like really, really cheap setup, you can get away with $100.
Really?
Well,
You would put a pulley on
but
a
minus the water tank collection. So you need like a $2,500 to $5,000 water tank is anywhere from 150 to $250. So that's
talking about gallon.
yeah. That's a static amount that you will have to spend. But the generator itself, the guy that I saw do it on YouTube, he created like a little, again, it's an alternator. It has these adapters that connect it to the PVC pipe where the water runs through. There's this little rod where the computer fan that he stuck on the end of it the water runs through that and spins it, and then it charges the alternator on the outside of it. And the alternator, you get a little steel piece of rotating mass that goes where the pulley goes on the alternator, right? And instead of it being a screw, it's it's bolted in, and at the end it has that fan where the water runs through and creates electricity. So I truly believe this can be done. The only thing I need to test personally is whether or not the water will continue to recirculate. Well, number one, when I siphon it out of the big tank into the lower small tank where it does this recirculation process, does that continue to recirculate, right? Will it? So the concept is you got like the 5,000 gallon tank. I think it was 500 gallons or 750, something like that. Whatever it is, the tank that you've got stands above the ground, and then, like I say, you get that PVC pipe that goes into the tank. Water gets siphoned out above it, or it goes up, hits the alternator wheel, spins that. It comes back down outside of the tank into another tank that recirculates the water back up into the top of the other tank that you're pulling it from. Question is, how fast does it siphon? Does it siphon too fast? I'm assuming that I have to have all of my connections watertight and sealed so that they hold a specific pressure, right? Because that's, if it's not holding pressure, it's leaking pressure somewhere, then I'm going to lose water, and that's going to defeat the purpose. But I believe one of those you could put 4 in, and even the return side, the water where it's coming back into the main tank, you can put little water wheels there and shrink down the water exit from the small tank to where it actually turns into a jet, and you can create power with the re-entry of the water as well. You could do it off of a lake, like if you live on a lake and you've got a pier, you could stick those pipes into the water, and they'll just, as long as the water can recirculate and continue back and forth flowing through that wheel, you're generating electricity 100%. And imagine like being able to generate electricity 24 hours a day, 7 days a week. You don't need the power company anymore. You're not paying taxes anymore. It's all free.
Yeah, you just gotta maintain it yourself, and
Right.
that's it.
And the amount of money that you would put into it, if you spend just $100 a month on electric bills, and that's low, right? That's pretty low for a lot of people.
It's low for me. I have a water and a gas bill.
Yeah, those are probably. I mean, yeah. So.
I mean, a light bill and a gas bill and a water bill. So yeah.
Right. So I mean, like a water bill and a electric bill, they're gonna run you 150 to 200 minimum a month.
Minimum.
So multiply that or divide that by however much it costs. Then that's the time it takes for this to pay itself off, right? The beauty here is if you're able to get that little power or the alternator working properly, and you create 3 more, the pieces it's just PVC pipe. It's, once you have the tanks in place and you have all the PVC pipe that recirculates the water and those things in place, all it is that water generation piece. I mean, obviously you're going to need like an inverter to go into the house and feed, whether or not you got like, my plan was a bunch of Tesla power walls, maybe 15 or 20 of them, to where I can run my house off of battery for 2 weeks straight. I was going to have the water generators power those, and then they're going to feed into the grid and or usage, right? So you stack your battery bank with that, because let's say you go out of town for a week and You're about break even on energy consumption and use and production. You go away for a week, now you've just charged everything you got. So um, there's so many ways to produce things yourself, right? A lot of people,
Innovation. This
yeah,
is what we need.
a lot of people don't really even go down the path of trying to figure out how can I reduce my reliance on the system, because the system is what keeps you relied on them, and it's what keeps you down from doing the things that you want to do. The system requires you to have a job. The system requires you to have credit. The system requires you to basically jump when you're told to jump. Hell, you own your own business, and the system requires you to answer to 40 bosses instead of one or
Come on.
4,000. So
Come on, man.
it's like,
And then everybody who's taking a check also wants to see you working just as hard as them, just for the sake of it.
right, right.
They like, so what? You gave everything to be in this position. We still want you to give us more. And so it's
Yeah.
unbelievable. It's like it's a really hard space to be. When they say it's lonely at the top, it's simply because everybody's shooting at you and you're doing everything to protect them and they still don't care. It's like having teenage kids, like they just resent you for no reason. And all you're doing is trying to protect them and give them an opportunity.
Yeah, that's the world these days. I mean,
I know it's pretty sickening. It's sometimes sad and it's hurtful sometimes to be the boss or how people see the boss. Um,
yeah, I mean,
yeah,
that just comes with the territory, I guess.
you got to pay the cost to be the boss.
That's right. But once you get to the point where you know you don't have to be the boss anymore, and you can be self-sufficient, and whether it be food, water, electricity, income, all self-sufficient. That's the goal here. I mean, I wish I had what do you call it? Like, I wish I was kind of part owner of this server, just to tell Tilio, hey, let's change this into self-sufficiency, not just trading options, but let's turn it into a lifestyle of being reliant on only yourself, so that everything else around you isn't a necessity or a requirement to survive. You know, electricity requirement, trash collection requirement. Um, shit. What else you got? Food is absolutely a requirement. Job requirement. Um, the list goes on. All right, I could sit here and probably brainstorm and come up with 100 other things that is a requirement in life, because of the system. Um, that's the thing that irritates me about people that complain about the system and then go out there and use the system.
Mm-hmm.
Like you guys complaining about the same shit that you're still using. That make no sense to me.
Nope.
So I've never been part of the system, never been drugged down by the system, and I'd be damned if I ever do. I mean, I'm trying to get so far away from the system, it's not even funny. I'm trying to have 50 to 60 million dollars. I was looking up, the other day I was looking at the server Discord and on like the car channel where people post their cars or what their dream cars are. And I'm sitting there thinking like, damn, is something wrong with me? Like everybody else is looking at Chargers and BMWs. I'm looking at $5 million airplanes. Right?
No, you
I
just
don't.
have a different. You just have you just have a different viewpoint on what's achievable. You know what I mean?
Right, right. And
That's just that's just how it is.
I'm just sitting there like, and I don't say it to act like I'm better or I've got something more than somebody else. I just think that I'm sitting here thinking, a lot of people in the world struggle for little things like that. And the only reason why I wanted a private jet, or why I want a private jet, my daughter's autistic. It's impossible to go on an airplane with her. Impossible. She screams. She will scream like she's being murdered. Force her to sit down, she will scream like she's being murdered. So I told my wife, like, I mean, honestly, before I even really started making money in the stock market, I asked my wife, how much is a private jet? How much can we, charter a private jet for? Because our daughter is just a monster, a nightmare on the airplane. Yeah, it's like $40,000 to go from coast to coast, I think. It's the whole plane. I'm like, if it costs me 40 grand, how much does it cost to buy the plane, maintain it? So it's like, well, I could get a used Learjet or like some are called Cessnas. It's a brand. Um, I've seen them go for 5 to 9 million, and it takes about $1 million, $500,000 to $1 million to maintain every year. So I'm sitting there thinking, all right, it's going to require me to have at least 50 to 60,000 before I buy or $1 million before I buy a plane, and then it's going to require me to at least make double or triple what it requires me to maintain it, right? Because I'm not trying to put myself in a hole, but at the same time, I'm thinking I got to fly on this private jet. That's like I see these planes flying over my house all the time. I live near the airport, and I see private jets flying. I'm like, that's gonna be me one day, right? I'm tired of being ordinary. I don't want to. I don't want to be ordinary anymore. Nothing wrong with being ordinary. It's just not for me.
That's it. It's like it's nothing wrong with it. It's just not what I'm trying to do right now. And everything, it's different strokes for different folks,
Right. Absolutely.
Like for me, I think about owning a boat or owning a plane or something like that, and I just like, no way, there's no way. But I have Airbnb, so I love property. I want high rises. I want a place over in Santorini. I want Airbnbs all around the globe. So when I want to travel around and go from place to place that I love, I just want to have a place that the visitors buy it for me, and then I get to visit it and live in that place for 3 months out of the year, and then move to the next place, and
Right.
you know, and so everybody has a different vision about what they're trying to do. And so one of the reasons why stock trading is important is because it's something that I can do after I sell my business one day, and I can run it from a laptop from anywhere in the world,
Exactly.
as long as I know the time zone. And so that's what earlier I wrote down mindset. What's your long-term goal? You were asking one of the gentlemen, and it was like to be completely debt free and then to be my own bank. Because once you own your time and your money, you can literally do whatever you want.
And the sky's the limit.
And the sky is literally the limit.
And I'm gonna be flying in it in my own private jet.
That's it. Well, maybe you can maybe I can rent it from you. Let me borrow it and I chip in on the expenses.
I mean, at that point, it's gonna be like, who's trying to go to Fiji? I can fit 10 or something. You know what I mean? Like,
That's it. That's how me and my friends do it. We're like, hey.
you can charter a private jet.
Mm-hmm.
If you have as many seats as there are people, or as many people as there are seats, you can charter a private jet for, I think it's like $3,000 or something. It's actually pretty cheap comparatively speaking. I mean, that's across the country though. If you go to like, Hawaii or the Asian side of the world, you're looking at double or triple that cost. But I mean, still, if you fly from here to Tokyo on first class, it's $9,000 to $20,000. So what's the difference from sharing a private jet with 10 other people? It's
Yeah,
it's
it's
not
not a big
easy.
deal.
Yeah, it's not easy to do. It has to be a popular destination, but at the same time, it's like the options there. Um, but yeah, I mean, that's the whole thing. Like the whole mindset mentality of it is, where do you see yourself in 5, 10, 15, 20 years? Where do you want to be in that time frame? And I mean, has that thought even crossed your mind? And not you specifically, just in general.
Yeah.
Has that thought even crossed minds of the people that are living their lives? You don't even have to be in the stocks to try and set goals for yourself, because like I said, you don't have goals, you don't achieve success. There's no
Nope,
such
you're
thing
just
as
gonna be
success
walking
without it.
around in a circle,
Right.
confused about why you're not getting anywhere. Well, you haven't you haven't set your focus on anything, so of course you can't get anywhere.
I told my wife is obviously my confidant, my best friend. So I tell her everything. And I was like, 60 million in my account. That's not my end goal, right? I mean, the private jet, 60 million, 100 million. That's not my end goal. My end goal is 400 million, right? Because I want to start like a um. So like I'm a big supporter of military families. A big supporter of people where their loved ones were killed in battle. And I want to go and do things like create a fund for them to where it pays them a salary because their husband or wife was killed in action and they were the only ones creating salary, so I want to give back to those people that have lost people because of their service to the country, right? I want to do that, and I also want to do something for autistic children because they get so overlooked in the world. I want to create like I was thinking about like a nonprofit organization. I could create it myself. I can
Yeah,
start it with
you
$50
should
million.
check out the MAC McDonald Training Center. Um, check that model out. They have done something really good for people that become adults with things that can hold them back in life,
Right.
sensitivity to sounds, sensitivity to touch, people getting too close to them. Maybe they're born with a certain type of thing that makes certain things hard for them. There's a whole place, and they refurbish all the Dell computers in the state of Florida. We have this thing called SunPass that you go through the tolls. They produce all the SunPass for the state of Florida. They're a fulfillment center for a lot of companies. They figured out a way to help these people make money, have a place to go to where they're cared for throughout the day. They have training programs that are connected with Moffitt Cancer Center. So there's so many beautiful things with people that amount a lot of wealth, and then they come and solve an issue. And so Mr. McDonald, not McDonald's like the food, but Mr. McDonald, he created this because of one of his children. And so when you shared that story with me, it just made me remember why I volunteer there, why I love servicing for them, and why I share what they're up to all the time. Because people like you amount enough wealth to actually create something to solve an inconvenience for somebody you love. And so I hope you do it, Hostile. I really do.
Oh, but I hope so too. I mean, you know, my wife and I know the struggle of trying to get the help we need, right? And if I can be in the position to produce something for people that are struggling, my end goal, like I said, is to have $500 million. I can do it with that. I can do it with that kind of cash because I can make that much money in the market, and I can turn around and do the exact like I can do all of these charities that I want to do, but I can't do it with what I've got now. It's impossible. They always say, well, it doesn't matter how much money you got. What matters is whether or not you're doing charity. Well, I have goals, and the charitable sized goals that I have are so far beyond anybody's imagination that I would be disappointed in myself to get into it right now when I can't do the things that I want to do. So it's kind of, for me, it's like, it's just a waste of time. I need to achieve other goals first before I can start giving back. Um, Giving back, like here on this server, giving out my knowledge, experience, and all that, that's one way of charity, I guess you could say. But even though people are paying for it, it's still like I could set a time limit and say I'm done 11 o'clock tonight, guys. You know, but um, I like helping people. I like educating folks. I like trying to get people to have the right mentality in life because if everybody thinks the right way, then the world becomes better, right? So if people are negative or people are thinking negatively and they're doing things that aren't beneficial to themselves, it's just going to bring everybody else around them down, so being
That's
able
it.
to be charitable and give back things after I've made it to where I was trying to get to, that to me is like the next step in being who you were truly meant to be. Um, and I'll be doing it from my private jet.
That's it.
I've always dreamed of like walking up to somebody's house and asking, are you so and so from this soldier? Yes, I am. He died. And then I can say, well, we provide a service to families like yours where money that we've been blessed with, now we're going to come in and help you because you've had a tragic event happen, and want to still help. Like I've so I used to work on a military base, and there were a lot of mothers that had 2, 3, 4, 5 kids. Husband's always gone, right? But at least his job is feeding them. But the moment he's gone, what happens to all those children? That's really my what do you call it? My sweet spot. My heart is tender for children in general. So everything that I do is like when I talk about charity, for example, or like military families, or um, autistic children, or some disabled type of children. It's because they're children. I could care less about adults. To be honest, dead honest. Don't care about adults. You're old enough to know what you're doing. You should know
Or
what
at least try to
responsibility
figure
is.
it out.
Right. You get the means and the tools right in front of you. I'm not going to hold anybody's hand. But children, they don't have that, right? They get what we give them. And if they don't get enough to be successful or be loved, or whatever the case is, then it's unfair, in my opinion, right? Children should all get the opportunities, and they should all be cared for. Um, so that's my sweet spot when it comes to when I do decide to get into charity. When I think I've got enough money to do it to the size that I'm interested in doing it, then that's where I'm going to target is the children. Like I told my wife also, I want to have 50 kids. Like I want to adopt.
Oh shit.
I
Oh
want to
no.
adopt so many kids that when it's time for Thanksgiving, my house is like,
That's
it,
a lot.
I
I
mean,
we have one 18-year-old son, and then right now we have 4 foster babies living with us. These kiddos, they're just really cool. But man, after having one get all the way up to going to college next year, and then now having a baby in diapers and people in elementary school and middle school running around the house again, oh my God, man, God bless you. 50 kids, hostile. You a little bit crazy.
well, I mean, like I
You
was
might
saying,
be seeing. Maybe it's getting kind of late.
nah, not at all. I'll tell you right now,
I'm
if I'm
talking about the
making,
babies.
oh, if I'm making the money that I'm trying to make, I'm gonna have people. I'm gonna have a team of people, right? I'm gonna have teams.
Yeah,
You
you
know,
got to with 50
yeah.
kids.
So I mean, it'll all be planned out. I want to have. It doesn't matter. Like I don't care where they're from. It doesn't matter at all to me as long as they're children. That's the only thing that matters. And you know, my goal is to have like children from all walks of cultures, right? Because I feel like culture in this world, it kind of divides us in a way, right? Um, like how do I say, like Indians, for example. Indians like to stick with Indians. Like let's talk about marriage or being together. Culturally, Indians are very tight knit to their culture. Vietnamese very tight knit to their culture. They only want to date Vietnamese. Um, there's quite a few cultures out there like that. So what I wanted was to have one kid from every culture so that they can all live in one household and understand that culture is not what brings us together. Color is not what brings us together. Whether or not we believe in God or whatever is not what brings us together. It's um, love, obviously, but being together to share it and to grow up together with it, right? Because I think that's the most important thing in the world, and if you don't have that, then nothing else is worth it, right? So, teaching children to love each other because of the fact that they were, um, brought up together, and they look past whether or not they're a certain skin tone, or they look past whether or not, um, whatever the case is. There's so many
Hmm.
things out there that divide the world. class warfare. And that was kind of like one of my goals, or one of the things that I really wanted to do in life, was get one child from every culture and raise all of them at the same time. Have, like I said, armies of people to help me. And I want them to realize, to see through the bullshit that they see in the media and everywhere else. Right? I mean, granted, don't get me wrong, there are things that happen that are true, right? Like racism is true. It does happen. But, you know, generally speaking, like when I'm out and about, um, I don't really see it, because a lot of people are actually good people, right? It's the outliers that you see on the news, right? Um, so it's the whole concept of wanting people to grow up together and to look past culture, ethnicity, skin tone, gender, whatever class warfare that's going on out there.
Yeah, everybody just come together.
Right. And I wanted to do that to prove that it can happen, doesn't matter where you're from. And I know it can happen. That's why I said I wanted to prove it, because I know that it can happen. And people just have to care for one another. That's it. There is nothing else.
Good night, Randall. I'm about to go lay down too. I gotta get up at 5 and get to a job site by 6.
It sounds like fun.
Yeah. I do. I run operations as well inside of my company for our mobile services, and we have a company that has 67 trucks, and they dispatch early. So whenever we're gonna get over there and do something for them in the morning, we get there and get done before their people load up. So tomorrow's just one of those days.
I hear that. Well, I'm off tomorrow, so
Enjoy. Yeah, I hope the market's sweet to us tomorrow, or gives us more bargains.
it'll do one or the other. I can tell you that.
Well, nice talking to you. I really appreciate you when you come on here.
Yeah, of course. You're welcome. Have a good night.
Good night.
All right, is anybody else around that has a question before I end the session? All right. Guess I'll end it.